markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
21 on Wall Street. We do check markets all day long here at Bloomberg. We did have the Dow dip briefly into the red. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. That dip for the Dow brief. Right now, back in the green, up 17. Gain there of less than 1/10%. But key takeaway at this hour, the Dow has been fluctuating. S&P holding on to a gain of 12 right now, 62.38. That is a gain of 0.2%. NASDAQ up 102, higher by 0.5%. Our Mag 7 index ripping higher now by 1%. NVIDIA up another 2%. NVIDIA with a $4 trillion market cap. First company in history to achieve that milestone. NASDAQ up 105 now, up 0.5%. And the 10-year yielding 4.37%. Spot gold, little changed, up 0.2%, 33.08 the ounce. West Texas Intermediate crude up 0.2%, 68.48 a barrel. Brent back above 70, 70.30, a gain there of 0.2%. Hims and Hers Health shares up 1.9% after the telehealth company announced plans to expand into Canada next year, timed with the anticipated availability of generic semaglutide. Again, shares of Hims and Hers, they're up by 1.8%. So recapping, we got NVIDIA, $4 trillion market cap up 2%, S&P up 0.2%. Dow has been fluctuating, but right now up less than 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, for me, being a media and entertainment background person, the news for me today was Linda Yaccarino stepping down as Chief Executive Officer of Elon Musk's social media platform after only 2 years on the job. From her days at NBC Universal, I knew Linda Yaccarino. She is widely respected on Wall Street in the media and entertainment business. I personally was surprised that she left NBC Universal to go work for X simply because I didn't think anybody could work for Elon Musk because he's that hands-on for the business. We are perfectly timed to speak with our good friend Ed Ludlow, Bloomberg Technology co-host. He's in Sun Valley, Idaho, where all of the media and tech moguls are meeting up for a couple of days at the Allen and Company conference. Ed, how did this news land in Sun Valley?
Yeah, it's slightly surprising. It's interesting because, in her post, Yaccarino framed it as a, mission complete kind of turnaround process. But remember, lower down in the post, she references XAI. And what's changed in recent months is that Musk had combined X, the social platform, with XAI, the AI company, under XAI Holdings. You hit a lot of the themes spot on, Paul, that it is difficult to work for Elon Musk, but the turnaround bit that she cites in her post is one for debate. As we understand it, revenues in 2024 were down from 2023. They were looking like they might be up in 2025. It was difficult to bring advertisers back to the platform, but Yaccarino had said many had returned to the platform, Elon Musk being the sort of wild card about the appropriateness, I guess, of advertising on that platform. But yeah, there's a lot of ways we could go with this one.
Ed, you talked about, the volatility, especially when we think about a lot of Musk's businesses and what's happening inside. For Linda, does it seem as though this was just a decision waiting to happen, or what are you hearing?
Yeah, nothing so far. We just don't know. I would note that it's sort of the latest high-profile stepping down or departure from Elon Inc. We're seeing it happen across Tesla, as we reported. Omid Afshar, who for a really long time was basically Elon's chief of staff, and later had more broader responsibilities across sales and manufacturing. We broke the story that he was gone out of Tesla. In SpaceX, I know that internally, we broke the story on their latest valuation yesterday, but internally, departures have kind of ramped up recently as Musk's political activity has ramped up. It is not easy to work for Elon Musk. Like, kind of how the structure works at these companies is there are very capable people there. For example, at XAI, like XAI is a really key point here about what's happening with X. But there's a guy there called Ross Nordine who like is also kind of like the chief of staff, but he's doing a lot for Elon while Elon's out doing whatever Elon's doing. But at the end of the day, no matter how many decisions are made by committee, by this group of very talented people in all these companies, the final call is kind of made by Elon, and that can sometimes slow things down. It can sometimes lead to robust debate, you know, things like that. Right. But again, I'm really focused on where X fits into XAI long term. I think that's a big factor here, and there's a hint in that Yacarino post.
Well, I can see that you're out in Sun Valley, Idaho. I love the background there. I skied that mountain many years ago. It's fantastic out there, summer or winter. Beautiful. Highly recommend. Ed, at the Sun Valley conference out there, the Allen & Company conference, what's kind of the expectation for these couple of days?
Yeah, so it's interesting because there is a bit of movement in TMT, and that goes to the history of this event, right, Paul? You know it so well. You know, the news that we got is that Disney Hearst might look at selling their A&E asset, which is the cable channels like History Channel. So that's interesting. Just having that out there means that there's a marketplace right now. We know that Warner Brothers is on this plan moving into the middle of next year where they want to have a split, right? A standalone streaming company and a standalone pure play studio. And we did manage to catch up with David Zaslav, the CEO of Warner Brothers Discovery, who said that it's kind of all on track. We don't need any approvals. We're not really ready to talk about the debt side of things. They also just, of course, had Superman hit the box office, and he was pretty happy about that. But I think that the signals are that in that space, media assets, there's some life, and it just takes one domino for the rest to fall, if you know what I mean.
Well, thanks so much to Ed Ludlow as we really break down what's happening at the Sun Valley Conference and, of course, that Linda Yacarino headline of her departure from X. But we want to pivot over to real estate. Of course, this is a sector that I cover, so I love to talk to our next guest. Nice. This is my jam. Yeah. But Jeff Langbaum, he's a senior U.S. REIT analyst, and he is based in the Princeton, New Jersey office. So not too far. I haven't been there, but heard...
Got great lunches.
Okay.
Yep.
You sold me. Yep. But we'll be talking about the mid-year outlook for U.S. REITs right now, and he is a REIT analyst, senior REIT analyst at Bloomberg Intelligence. Jeff, when I run S15 Real on my Bloomberg terminal right now, of course, this is an index of a lot of the U.S. REITs that we track. I'm looking at a chart that's down just a smidge on a year-to-date basis. Can you really tell us what's going on right now in the commercial real estate space?
Sure, happy to. And Nora, just if you think you like real estate, you should know Paul loves it even more.
Oh, yeah.
So basically, you know, like the rest of the world, at the beginning of April, real estate tanked. And, you know, people had to sort through what was real, what wasn't real, what the real implication would be for real estate. And since then, there's been a pretty strong rally to kind of get back to close to where we were going into that time frame. The actual fundamental backdrop is pretty solid overall. It's going to vary a lot sector to sector. And what the outlook might be going forward is clearly going to depend on kind of underlying supply and demand fundamentals.
I got the 30-year mortgage still at 6.77%. That can't be good for your world. Jeff, how's the real estate market in general kind of adapting to, I guess, a higher for longer rate environment?
It's good for landlords of rental apartments, that's for sure, because nobody's buying homes, and you know, in that space, demand is strong. There's a you know, flood of supply coming into some Sunbelt markets that's, you know, causing a problem in some of those markets, but overall demand for rental housing is very strong. But I assume you're talking more on the financing side and what that means for asset values. You know, the real estate world is getting used to a high interest rate environment. Like, you know, prior to the last couple of years with zero rates, you know, the world operated, the commercial real estate operated just fine with rates where, you know, kind of where they are now. And, you know, there's going to be some pain as some troubled properties have to get recapitalized. And, you know, right now there's still a frozen transaction market because people are trying to figure out what the real values are going to be. That'll all get itself worked out. And the owners of better assets are going to ride through this just fine and probably find some opportunistic investment opportunities on the back end.
Jeff, what's the story right now? Of course, we heard a lot of doom and gloom, a lot of headlines about commercial real estate, CRE being, for lack of a better word, a hot mess. Are we bottoming? What are you all seeing in terms of predictions for the future?
Yeah, I think the story right now really is one of bifurcation, and it's becoming clear that doom and gloom is really on one end of the market, the weaker assets, the problem balance sheets, problem capital structures. There's a certain component of the real estate world, especially I'm talking more about office, but even dipping into some other asset classes that probably is going to have some major problems. But when you think about kind of the core of the market, I think we have turned the corner. Leasing is strong in many markets. Again, back to office, we're seeing signs of people coming back to the office. Their companies making them come back to the office, and I think there's less doom and gloom. You're still going to see headlines of distressed assets trading at pennies on the dollar. That's got to clear out through the system. But I don't think that we're nearly as worrisome an overall landscape as we were maybe 6, 12, 18 months ago.
So right here in New York City, we were actually seeing a boom, in a sense, on Park Avenue when we think about a lot of these office buildings here. Are we continuing to see a bifurcation between high versus low quality office buildings?
Yeah, and to the extent where you might actually start to see some new office buildings come out of the ground, as scary as that is, because the high end, there's not space available. And so if tenants want that type of space for large blocks, they're going to need new buildings, and the economics are starting to get close to maybe making sense if somebody's got a good land position to come out of the ground on an office building. But in the meantime, the stuff that exists, the high end of Park Avenue, Fifth Avenue, close to transit centers, that stuff's leasing up. It's leasing fast, and it's leasing with pretty good rents because landlords have pricing power because the demand is outstripping the availability.
All right, Jeff, thanks so much. We appreciate that. Jeff Langbaum, Senior U.S. REIT Analyst for Bloomberg Intelligence. All right, folks, join me and Tom Keene tomorrow, 9:30 a.m. Wall Street time. We welcome New York City Mayor Eric Adams live and in studio. That's on Bloomberg Radio, Bloomberg Television, and Bloomberg Podcast page on YouTube, 9:30 a.m. tomorrow, Wall Street time. Kind of holding on to the gains here a little bit, Nora. We got the S&P up about 0.3%. The NASDAQ up about 0.5%, so pretty solid there. I'm going to call out for Tom on the Upper East Side. He asked me for a VIX call here, 16.23, so that's really a different place than where this market was just a few weeks ago here. Even the dollar, looking at the Bloomberg Dollar Index, even that's higher. How about that, folks? You get a little bit of life in the U.S. dollar. 10-year Treasury yields come in a couple of basis points, 4.37% there. But again, the 30-year mortgage, fixed mortgage, which is priced off of the 10-year in most cases, 6.77 was the last number there. And that's higher than a lot of people are comfortable getting into, particularly if they're sitting in a mortgage today that's, 3%, 4%, or in the case of Alex Steele, 2.3 or 2.75%. That's a tough trade there. All right, we're going to have more coming up. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. A rally in some of the world's biggest tech companies, spurring a rebound in stocks. NVIDIA making news this morning, hitting $4 trillion in market cap. It is the first company in history to achieve that milestone. NVIDIA up now by 2%. S&P up 17. That's a gain of 0.3%. The S&P back at 62.42. The Dow up 63 now, up 0.1%. The NASDAQ Composite Index up 111, up 0.5%. Our NASDAQ, our Bloomberg Mag 7 Index up by 1%. The NASDAQ 100 Index up by 0.3%. Again, NVIDIA up by 2%. 10-year at 4.37%, with the 2-year currently yielding 3.87%. Gold little changed, up 0.1%, 33.06 the ounce. West Texas Intermediate crude up 0.2%, 68.50 a barrel. Brent holding above 70 right now at $70.28. As for tariffs and markets, Ethan Devitt is chief global market strategist of Moneta Group. She was interviewed this morning on surveillance.
There is still not a whole rate of certainty. We had a little bit of certainty, and now the tariff drama has really kicked up a new notch this week. So I'd say it's difficult to adapt when you don't know what's around the corner. We've had the on again, off again, I say conviction in whether those tariffs will last, so that's been difficult.
Ethan Devitt of Moneta. And as we heard from our Sally Bakewell right here on Bloomberg Intelligence, Goldman Sachs is planning to ask junior bankers to confirm their loyalty on a regular basis in a bid to limit advances from talent-hungry buyout firms. Goldman shares, they're up today by 0.1%. Recapping, S&P up 0.3%. NVIDIA, $4 trillion market cap now, up by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, also streaming live on YouTube as well. All right, Nora, here's my take on energy and our need for energy and where we get it from.
Listening.
I think we're going to need it from everywhere. I mean, if these AI projections in terms of their demand for energy, I just think you're going to need everything. I think you're going to need fossil fuels. I think you're going to need the alternative energy stuff, whether it's solar or wind or whatever. And I think that even includes nuclear. And you're talking to a guy who lived through 3 Mile Island, so I know what can go wrong there. But I think our next guest kind of has some thoughts there on the whole nuclear play as well. Isabel Bomecki, nuclear energy influencer and author. Isabel's a former model who has built a following discussing the role of nuclear energy to fight climate change. Her upcoming book, Rad Future, will be released this summer. How about that? Isabel, thanks so much for joining us here. How do you, what are you trying to influence out there? What are some of the points you're trying to get across to your audience as it relates to nuclear energy?
Well, first of all, I think when we talk about nuclear energy, it's very important to highlight that this is the most reliable source of clean energy. And so when we're talking about a transition to clean energy, which is what we all, are aiming to do, we have to make sure we remain with a stable grid, and nuclear really helps with that. We've seen around the world that places that turn away from nuclear end up with dirtier and less reliable grids. But there are so many other benefits. For instance, a nuclear power plant employs up to 1,000 people who have very high-paying, stable jobs, union jobs. It's the source of energy that uses the least materials, the least amount of land. And more importantly, as we're witnessing right now, it's a source of energy that has bipartisan support in the United States. The Biden administration was extremely pro-nuclear, and so is the Trump administration. So I think those are all things that we need to take into consideration when we're talking about a clean energy future.
Isabel, so back in 2019, there was the Australian bushfire season, and then additionally, we had the Amazon rainforest wildfires. Both of these events really helped to inspire you to become a part of the solution when we think about fighting climate change. How much progress has been made in that fight against climate change since then?
Well, some progress, but as always, our energy demand, and you were talking about this beforehand, our energy demand just keeps increasing because we keep inventing newer technologies that use a lot of energy. Right now, 10 years ago it was cryptocurrencies. Right now we're talking AI. We're talking about AI and the huge increasing energy demand. And so I think, unfortunately, we just never run out of ways to use more and more energy. So while some progress has been made, our demand has also increased, so we're still burning a lot of fossil fuels. About 80% of the world's energy is still provided by fossil fuels. So we have to keep investing in these technologies, and this is where nuclear can play a really big role. It's already the second largest source of clean energy in the world, just behind hydropower. It is the largest source of clean energy in the United States. And I think for over 3 decades, it was completely ignored for a variety of reasons, and some of them is the fears around accidents, which we can talk about a little bit as well. So it's very important that we're now investing in this technology again so that we can speed up this transition to clean energy.
Isabel, talk to us about modular plants. We don't have to go and build these monster plants that we see occasionally. I know one, most recent one was built years ago in Georgia. Talk to us about the smaller modular plants. How that technology could that be used?
So I think we actually do need to build some of the large plants because as much as small modular reactors, or these new technologies that people are very, very excited about, unfortunately, if I'm a utility or a data center, I cannot go and buy one of those off the market just yet. None of these companies have built prototypes, so we're still pretty far from them being commercially available. In the meantime, we have to build the existing technologies that we have, but some of the benefits that the small modular companies claim they will have is they'll be able to reduce costs, time to build, and so on. But again, all of this has yet to be proven. And so I think we cannot put all of our eggs in that one basket. We have to invest in technology that we already know works.
So Isabel, you have a book called Rad Future. What's that all about?
So Rad Future was inspired really by my own need to have an accessible book about nuclear electricity. To your point, in 2019, I saw the fires in Australia and the Amazon, and that inspired me to do something using my platform that I had built as a fashion model to do something about climate. And at the time, I tried buying books that explained how nuclear worked, and I couldn't find anything that was accessible. It took me many, many years of research to get to a point where I could break down this information about nuclear, the history of the anti-nuclear movement and the technology itself into something that was extremely accessible. And so Rad Future was inspired by that, by a need to provide accessible material. And I think it's such an important topic that right now is being discussed everywhere. And I think people should be able to learn about the technology and answer their questions.
Isabel, with the Trump administration, do you sense that nuclear power may get more support, less support, or no real change?
No, the Trump administration is extremely supportive of nuclear. He passed several executive orders mandating the acceleration of nuclear in the United States. To be determined what's going to happen. Also, in the one big, beautiful bill, they basically maintained all the support, the credit tax and the LPO guarantees for nuclear as well. So the administration is extremely supportive of nuclear. Hopefully, this will play out in the real world, but it's still to be determined depending on some of the nuances of the tax credits.
Isabel, thank you so much. Appreciate it. Isabel Boehmicke, nuclear energy influencer and author, joining us from New York via Zoom, talking about nuclear energy. I don't know. I watched one season of Landman. I consider myself now an expert on oil and gas.
I have to catch it.
Yeah, it's pretty good. But I kind of just got back. If you think about, if you see some of these forecasts for the demand for electricity, just power in general, going forward, and they've been all those forecasts have been lifted significantly by AI and what the power demands are there. I think you kind of need almost, everything you can get almost for the foreseeable future.
And what's interesting that I found through Isabel's research, she's seen that nuclear is one of the only technologies apart from hydro that has proven to lower carbon emissions at scale.
Yep. It's just, you have to, it's the safety issue, and that's kind of always been the issue. And that's why I think some of these smaller modular reactors might be a solution, but again, the technology is years away, so that is not something that can be personally deployed. But we'll stay on top of this energy story. S&P 500 up 0.3%.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Happy Wednesday morning. We're coming up on the afternoon here shortly. I'm Nora Melinda here with Paul Sweeney. And there's lots going on in the markets today, but I am looking at a NASDAQ that's up about 0.5%, S&P 500 about 0.3% higher. And we're just seeing a little bit of action here, especially as we see NVIDIA becoming the first company to reach a $4 trillion market cap. But over in a lot of the other things that people are thinking about, of course, is the Federal Reserve. We're always talking about rates, and we have the Fed minutes that are coming out later today. We have the perfect person to talk about this with, Stuart Paul. He's U.S. economist with Bloomberg Economics. And let's chat a little bit about Powell, what's going on with the Fed minutes that we're going to be seeing later. I saw some news earlier that Kevin Hassett's going to be is being floated right now as a top contender for a potential replacement to Jerome Powell. And of course, we know we have the president who's really looking to see somebody who's able to bring down rates pretty efficiently. But people are saying that they may not be able to be as successful even if we do get a replacement. How are you thinking about all these things in the context of the economy?
There's a lot going on with the Fed, a lot of moving parts. When I think about the potential nominees who could replace Jerome Powell, I think the thing that we all have to keep in mind is that the president is in a position where he desperately needs a more dovish committee through time. So there's been some discussion if he does not fill the vacancy created in January by Adriana Kugler's term expiring, then it could be the case that Chairman Powell could remain on in a governorship maintaining the same 7-member board structure even as someone else, perhaps Kevin Hassett, perhaps Kevin Warsh, perhaps Scott Bessent himself, ends up getting nominated to fill the chairman's role. So there are a lot of different vacancies that are going to be coming up on the board, and the president needs to pick and select the right people to fill those roles. People who could be perhaps more loyal to him than they are to staff economists and the models that they lean on in forecasting economic outcomes. So who are some of those top contenders? Kevin Hassett, as you mentioned, he has a lot of the loyalty credentials. He went back to the first Trump administration. He came in this time. Kevin Warsh is just a perennial Republican, generic person that could end up getting the nod. He's lobbying very hard. He had a great interview yesterday with Peter Robinson from the Hoover Institution at Stanford. Chris Waller at 23 cents on the dollar on Kalshi. I actually think that's cheap. I'd take Chris Waller out of the bunch. When we think about the Fed minutes today in the evolving outlook, what we are likely to see is more discussion about an increasingly stagflationary environment. And the committee as it stands right now, and Chairman Powell, we know this, is focusing on the inflation element of that stagflationary environment. The president wants to see more focus on slow and low growth. He wants more dovish members of the committee, and we're going to see from the minutes today just how much of a divide there is in the committee between those who are focusing on low growth and those who are focusing on potential inflation from tariffs.
So the Fed minutes do come out at 2 p.m. Wall Street time. Stuart Paul will be reading them. I will not. I will be on a beach on the Jersey Shore. So Stuart, there's anything going on, you send me a text, something I need to know. Are you surprised we haven't seen inflation come in to this economy? A lot of folks believe that tariffs would in fact lead to inflation. Is that not the case this time, or is it just too early?
I think it's still too early. Of course, we saw from Steve Myron, the CEA chairman, focusing specifically on imported goods prices. There's a little bit of a wedge between his modeled price for imported goods and the actual CPI numbers that we're seeing, where supposedly, based on his models in the Council of Economic Advisors, imported goods prices have actually fallen in price. But when you look at the different line items with the consumer price index, things that we import that are especially coming from Asia, things like electronics, appliances, furniture, all of those items are marking price increases. And if you look at something like energy, which is subject to global demand forces more so than tariff rates in particular, those prices have been declining. So I'm going to be looking next week when we get the CPI report for June. I'm going to be looking at the specific line items that are most heavily levered to countries facing imports. I'm going to be looking at appliances, electronics, furniture.
Stuart, we of course know, right? We of course know that Trump is really looking for these rate cuts. Honestly, I'm sure he would have loved them yesterday. But is the economy in a place to handle an aggressive easing cycle right now?
I actually don't think so. Certainly not an aggressive easing cycle. I think that one camp that would be on the Fed arguing for rate cuts has a pretty simple argument to put forward. We hiked rates when we were running nominal GDP growth of about 7 to 8%. And nominal GDP growth in the first quarter was about 3.5%, the bulk of which was inflation because there was actually a modest contraction in the first quarter this year. That's reason enough to cut rates. From my perspective, with the unemployment rate at 4.1% and private domestic final demand running at an annualized pace of about 1.5 to 2.5% over the past 2.5 years, the Fed has to be really cautious if it's going to begin cutting rates. It's not just a matter of the tariff-induced inflation not yet showing up. That's not reason enough to cut rates. The Fed is in this position where it's going to want to lean against demand so that in the event that cost-push price pressures start mounting, it does not turn into a more pervasive inflationary cycle.
Stuart, good stuff as always, man. You bring it. Stuart Paul, U.S. economist, Bloomberg Economics. I heard he's a good skier. I don't know. We'll see. This is not his season, but you can hike or do something that's silliness. All right, folks. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories, global business headlines are coming up right now. Looking at this market, S&P up 17.3%. The NASDAQ up 0.5%. Norma, Linda, thanks Thanks so much for joining us here today. We will be back tomorrow. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. The search goes on in central Texas after the deadly and destructive floods, and Sheriff Larry Letha says there's debris cleanup too.
It's an all hands on deck. Everybody we got are out here, but also we have additional 2,000 plus people helping us.
CBS's Jason Allen along the Guadalupe River.
Recovery efforts are extremely broad, a 30 to 40 mile stretch along this river, and you can go just about anywhere up and down the river, and you will see people walking on both sides. They're going through the trees, they're looking at brush piles, they might be out in boats.
No live rescues have been made since late last week. 110 are known dead, more than 160 unaccounted for. Hannah Reyna's home took on water fast. She and her husband and 2 kids were able to survive.
The hardest part is probably seeing all of your stuff go away, you know? Everything that they grew up with is gone.
At least 3 deaths are blamed on flooding in New Mexico. The Trump administration takes a new step in its heated battle with a top university.
The Department of Homeland Security says it will subpoena Harvard University for what it terms relevant information for the Student Visitor and Exchange Program. A DHS official posted, "We tried to do things the easy way with Harvard. Now, through their refusal to cooperate, we have to do things the hard way." Harvard officials have forcefully denied the accusations and have stated they plan to comply with all lawful requests. The Trump White House accuses several universities of anti-Semitism following student protests against the war in Gaza. Linda Kenyon, CBS News, the White House.
Overseas, CBS's Elizabeth Palmer has the latest on efforts to broker a Gaza ceasefire deal. A U.S. envoy says one stubborn issue remains.
Millions of people on both sides of this conflict are waiting for news that the ceasefire has been signed. There are especially desperate prayers for it in Gaza, where Israeli airstrikes continue and where people are both homeless and really hungry.
President Biden's former White House physician is refusing to answer questions in a House Republican investigation into Biden's health in office. Dr. Kevin O'Connor invoked doctor-client privilege. Philadelphia's Mayor Sherelle Parker hails the tentative deal that will end a strike by nearly 10,000 public workers.
It will increase District Council 33 members' pay by 14% over my 4 years in office.
Ex-CEO Linda Yaccarino says she's stepping down after 2 years running Elon Musk's social media platform. The Dow is up 67 points. This is CBS News. A slice of 78-year-old royal wedding cake could be eaten in a matter of months.
Engaged on a very special order, a wedding cake for Princess Elizabeth.
An auction house in England says royal fan Jerry Layton has purchased the last slice of that 1947 cake for more than $3,600. He says he'll flambe it in rum to kill off the bacteria and eat it at a replica state banquet he's planning to hold for his 65th birthday next year. There won't be much left over for sharing. Layton's piece of cake measures just 4 inches. It was originally gifted to a chief petty officer in the Royal Navy. He reportedly preserved it and left it to his son, who kept it in a drawer. Deborah Rodriguez, CBS News.
Tiger King star Doc Antle has been sentenced to 1 year and a day in prison for illegally buying endangered animals and charging hundreds of dollars for photo sessions with them. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The latest batch of letters is in the mail. Welcome to the Wednesday edition of Balance of Power on what was supposed to be deadline day for countries to cut trade deals with the U.S. or face tariffs. That's, of course, before the president delayed it. And yeah, we've got new letters just out to Libya, Iraq, the Philippines, and others. We're going to talk about the trade saga and get into President Trump's last evening with Benjamin Netanyahu, when we talk to Brett Bruin from the Global Situation Room coming up. We'll also be joined by Michael McGlone at Bloomberg Intelligence just a day after Trump announced a 50% tariff on copper. And as Republicans on Capitol Hill try to claw back money that's already been approved by Congress, we're going to talk rescissions with our political panel. Bloomberg Politics contributor Jeannie Shanzano alongside Republican strategist Lonnie Chen. Let's start, as always, on Wall Street. Always watching what's happening here in Washington. For help, we turn to Charlie Pellet at World Headquarters in New York. Charlie.
Hi, thank you very much, Joe Matthew. Indeed, good day from New York. We have got the Dow, the S&P, NASDAQ all advancing right now, with the S&P higher by 18, back at 62.44. We're off session highs, but still looking at a gain of just about 0.3%. Dow Industrial is up now by 86. That is a gain of 0.2%, while the NASDAQ Composite Index higher by 114, up now by just about 0.6%. The Bloomberg Mag 7 Index up by 1% right now. NVIDIA playing a major role there. NVIDIA surging by 2%. NVIDIA right now with a $4 trillion market cap. First time that has happened. Did happen briefly, but it is the first company to achieve that milestone. We've got the 10-year 4.36%, the 2-year 3.87%, gold up $6 the ounce, up 0.2%, and West Texas Intermediate crude up 0.3%, 68.54 a barrel. Well, certainly Wall Street keeping an eye on any tariff developments out of Washington. Leslie Falconio is head of taxable fixed income at UBS Financial Services, and she was a guest this morning on Bloomberg Surveillance.
I think people are focused on tariffs right now and the cost that tariffs will have in terms of consumer and, therefore potential inflation. But in 2026, it's going to be more about tax cuts.
Leslie Falconio of UBS Financial Services. By the way, you can hear more of that conversation on the Surveillance podcast, and you can download that wherever you get your podcasts. NVIDIA this morning became the first company in history to achieve a $4 trillion market valuation, cementing its status as a kingpin in the global financial market. Right now, NVIDIA up by 1.9%. Recapping stocks higher, S&P up 18, up 0.3%, and Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet, as always, part of our program every day here on Bloomberg Radio, satellite radio channel 121, Bloomberg Originals, and YouTube. Yes, we are radio on TV. Search Bloomberg Business News Live at YouTube to dial us up here in the studio. I'm Joe Matthew in Washington. It's great to have you with us here as we keep our eyes on what's happening at the White House today. The president is going to be holding forth shortly in what they are calling a multilateral lunch with African leaders. Consider the leaders of Liberia, Senegal, and a couple of other countries discussing key areas of cooperation when it comes to security, infrastructure, democracy in Africa. The president will be out a short time from now. If he makes news, of course, we'll bring you to the White House for more. What is making news, the latest batch of letters here, and this is interesting. Remember, we had about 14 of them the other day as the president worked his way up to what is no longer deadline day. I was supposed to say happy deadline day, but now it's August 1st. This being the 9th of July, remembering, of course, that we've got 25% tariffs on the likes of Japan and South Korea, some pretty important trading partners. Today, we've got letters on Algeria, Libya, Iraq, the Philippines, and others. A 30% rate on Libya and Iraq. It's curious. President's posting these letters to Truth Social, and as he said yesterday, a letter is the same thing as a deal. So if at this point you have no deal, you get the letter, the president has just called out the terms of this whole thing. We have a lot to talk about today with Brett Bruen, of course, the president and CEO of the Global Situation Room, a longtime diplomat in Republican and Democratic White Houses. I will mention he joins us now at the top of the program here on the Wednesday edition. Brett, it's great to see you. I wanted to ask you, and I'm going to, about the president's decision to turn on weapons for Ukraine, this reversal that we saw this week. But I have to ask you, just to start off, about trade. What does a 30% tariff on Libya and Iraq mean for those countries? And why are we spending time writing these letters?
Well, I'll tell you what it means, Joe, for businesses, because these are coming out piecemeal. It's like every day, he's pulling out that marker and deciding, where in the world he's going to send a letter off to, as though, we didn't have other forms of communication, as though we didn't have a global strategy. And if you're a business leader, as many on this radio program will be listening as business leaders, look, I'm not just trading with one country or even one region. So the notion that the United States of America doesn't have a trade strategy, that Trump, essentially says, I'm going to put out a letter and that is a trade deal, it's folly, Joe.
Well, I get where you're coming from on this. The market seems to agree to the point that it's not even paying attention now, and the uncertainty is real. We just extended things once again. But what are we buying from Libya and Iraq that we need to put a 30% tariff on?
Yeah, look, Iraq, Libya, both oil-producing countries. I think the key question here, Joe, is whether or not this new deadline, after we were told that July 9th was going to be a, no budging, no fudging, this was the date, Trump, quite frankly, is making it really hard for businesses, American businesses and American workers to figure out how the heck do I make any plans, because he's, for lack of a better way of describing it, so fixated on the reality program that he is programming instead of understanding what does it take to actually run a business. And, bring up the 50% tariffs on copper. Well, we American companies need copper to build buildings in America, to make products in America. So we can't just turn a light switch on and have more capacity to create copper in the U.S.
We're going to talk a little later this hour with Mike McGlone at Bloomberg Intelligence about the copper story. It is pulling back a bit after that huge pop yesterday. Brett, there's uncertainty about trade, and there's also uncertainty about geopolitics. That's nothing new, of course. You and I talk about it every time you're on the air. But in this case, there are big questions about the Middle East following our strikes against Iran in cooperation with Israel. Benjamin Netanyahu decided to extend his stay in Washington this week, a second day of meetings with President Trump at the White House, said to be focused on a ceasefire in Gaza. We heard Steve Witkoff talk about it yesterday, a potential 60-day ceasefire, just like Joe Biden was talking about over a year ago. There's also the matter of Iran. And when you see Benjamin Netanyahu 2 nights in a row showing up at the driveway entrance of the West Wing so photographers can't see him coming and going, meetings behind closed doors, no readout from the administration, what's going on here?
Well, I think it's interesting because Trump is obviously desperately trying to get a deal, any deal, because none of them have worked out so far, including that ceasefire deal that he negotiated along with Biden's team back in January. And look, it is also a really challenging environment for Trump, just broadly in the Middle East. He made, one might say, the reckless decision to strike inside Iran, to strike those nuclear facilities. But we don't have a strategy, Joe. What's the strategy, whether it's with Israel, whether it's with Iran? And I think that's leaving a lot of questions, a lot of open space. Obviously, Netanyahu is sticking around to try to figure out some sort of agreement, some sort of announcement that they can put forward to say, well, on Gaza or on Iran, we're going to at least agree to the following principles. But the substance matters too, Joe. As you mentioned, I'm a recovering diplomat, and I haven't seen a whole lot of substance on the table yet.
Interesting. Do you think that there's another strike against Iran being planned right now?
You know, Trump has said he's going to give diplomacy a chance to do its work. This obviously another example, you know, the first one being when Qasem Soleimani was taken out by Trump in his first term, the Iranians really did pull their punches. I think similarly now we're seeing them pull their punches. This is a window. It's what we would call, you know, in diplomatic terms, an opportunity. So if Trump wants to avail himself of that, he ought to see if he can get something close to the old JCPOA, that Iran nuclear deal, with intrusive inspections, with true ability to ensure that Iran isn't going to be able to reconstitute its nuclear program. Now, obviously, Netanyahu's got a different agenda, and he's going to push Trump for a harder line. Hopefully, you know, the U.S. interests prevail in this.
Let's talk about his agenda for Ukraine, because the president is upset with Vladimir Putin, as he made clear in the cabinet meeting yesterday. He's reversed at least someone's decision, apparently Pete Hegseth's decision on weapons for Ukraine. Listen to Donald Trump yesterday.
That was a war that should have never happened, and a lot of people are dying, and it should end. And I don't know, we get a lot of thrown at us by Putin for you want to know the truth. He's very nice all the time, but it turns out to be meaningless.
Here we go, having to bleep the president of the United States again, Brett. I don't know if that ever happened when you were working in the White House, but talk to me about this decision, what it means for the Secretary of Defense, who, at least you read the tip sheets around here, is on thin ice after making a decision the president did not sign off on.
Yeah, one thing you learn on the National Security Council staff is you got to know what are your authorities, what do you have to coordinate or at least inform others of. And the fact that Hegseth made this, you know, consequential decision, I am cutting off the Ukrainians from these, you know, necessary, desperately needed defensive capabilities without even informing the National Security Advisor, who also happens to be the Secretary of State, is just shocking. It's mispractice. And I think Hegseth is going to pay a price for this, because we are now seeing, you know, successive issues when it comes to the safety of, when it comes to the national interest of the United States. You can't continue to make these errors. Obviously, it was embarrassing yesterday in the cabinet room. Trump is essentially dressing him down as he's sitting right next to him. You could see John Ratcliffe, the CIA director, sort of smirking over in behind Hegseth. And at the end of the day, look, Hegseth has made these decisions which are going to embolden Trump if he, rather embolden Putin if he believes that he, you know, with this summer offensive can make inroads, that he can push Trump to pull back on some of those defensive capabilities. But let's hope. Trump has, you know, made the call. When I was with him in NATO, he certainly seemed to be supportive of Zelensky and Ukraine's defense.
Brett, it's great to have you back. Brett Bruin, President, CEO, Global Situation Room, with us here on Balance of Power. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks higher right now, a rally in several big techs, spurring a rebound in stocks. NVIDIA briefly hitting $4 trillion in market cap. First company in history to achieve that milestone. NVIDIA right now up by 2%. The S&P up 14, up 0.2%. The Dow up 37, up 0.1%, while the NASDAQ Composite Index up 108 for NASDAQ, a gain now of just about 0.5%. The Bloomberg Mag 7 Index, of which NVIDIA is a key component, up by 0.9%. 10-year, 4.36%. The 2-year, 3.87%. Gold up 0.3%. 33.11 the ounce, and West Texas Intermediate crude up 0.4%. 68.60 for a barrel of WTI. Deal news: Merck is buying respiratory drug maker Verona Pharma for around $10 billion as part of an ongoing search for ways to fill the Keytruda-sized hole that will emerge over the next few years. Merck shares advancing now by 2.9%. Shares of Verona up by 20.65%. Linda Yaccarino, who was hired 2 years ago by Elon Musk as the CEO of X, is stepping down less than 3 months after the social media platform was absorbed by Musk's artificial intelligence startup. Again, recapping, stocks higher. S&P up 13, up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet in New York, watching Wall Street every day here on the fastest show in politics. We'll get back to Charlie a little bit later this hour and check on the Wednesday trade, which of course includes copper, something we talked about a lot yesterday. There's a reason why Mike McGlone is the most in-demand voice on Bloomberg these past 24 hours, because you might have thought it was coming, but nobody knew exactly when, and the president just went for it during the cabinet meeting yesterday. Here you go, everybody, a 50% tariff on copper imports. Now, if you read the terminal here, you will learn that the copper market is in turmoil because of the president. And what we've seen in the last 24 hours is a record spike on that news. Yesterday, you saw Freeport-McMoRan take off, and then today, everything's taken a breath and falling back. And we have big questions about, first of all, whether this actually takes effect. Presuming it does, that'll take place the 1st of August, according to the administration. But also, what does this mean for what they like to call Dr. Copper, an economic indicator in itself? And look at that on YouTube. There he is now, live from Miami. Mike McGlone, senior commodities strategist at Bloomberg Intelligence, who's living in front of a camera and a microphone today. Mike, it's great to see you. Assuming this takes effect, have we seen the jump in prices, or does it keep going up from here?
Well, I think we've seen it, Joe. The risk now is you're going to see a glut. Because there's every incentive in the world to find copper, to refine it, to scrap it, and to get copper and to sell it into that high price. And the tariffs are not going to really kick in until beginning of August, maybe, and they might not be 50%. But that price on the screen right now, $5.50, is $1 above the price in the rest of the world, certainly in London. And it reminds me very much of 2008. Remember the price of a gallon of gas went above $4 a gallon for the first time? That accelerated the recession at the time. In the rest of the world, we already have that tilt. And by the end of the year, the price of a gallon of gas was $1.62. So I'm afraid that this spike in copper is going to do the exact opposite. It's becoming a reverse economic indicator because it spiked so much.
Fascinating. The impact wasn't just on the metal itself, but of course the miners. And when you see a Freeport-McMoRan, it's fascinating. They've got a bunch of mines here, but they're also in a lot of other countries. When you look to South America, where there's so much of that mining activity, Mike, what does this mean for a multinational that's pulling copper out of the ground here and there?
Well, it's good for anything they're producing in this country and selling in this country, as Trump says, and producing in this country and not paying a tariff. It's bad for anybody else in the world who was exporting to the U.S. Let's start with Chile, Peru, Mexico, where a lot of copper comes from. That's not a good thing for them and their producers, at least in the short term. It depends if we stay at 50%. But overall, what it means is we have a glut growing in the U.S. of copper. We'll find more of it. It's amazing what you can do. I remember in Chicago, they'd find copper scrap in the buildings when they needed it, unfortunately. But the rest of the world, you look at the copper price, it's really been into the downtrend. It's that price on the LME around $10,000 a ton reached a pretty good peak and it's heading lower. The rest of the world's facing these tariffs, not just on copper, but in all U.S. goods they used to export to the U.S. So it's a big of a pressure factor. So here's the key thing is I'm worried by the end of the year that copper price in the U.S. will converge with LME price and that it'll all be heading a little bit lower, partly because we spiked so much.
Really interesting. You know, we talk so much about the market for copper, not only as an economic indicator, but something that's in strong demand right now because of the EVs that we're making. So many of the technologies, when you're starting to put data centers together, you need a lot of copper here. Mike, what situation, what status was this market in before the tariff was announced?
Well, that's a good point. It was a very stagnant market. Copper started the year around $4 a pound. It spiked to almost $6. Now it's right now about $5.50. So it was kind of stuck in the range. Tariffs changed everything. But you mentioned a key fact. What's the other most significant economically sensitive commodity on the planet? It's crude oil. It's heading lower. It's in a bear market. It's down about 7% in the year. It typically trades with copper, but the difference is copper is being distorted. And the thing is, what you mentioned is electrification is a good reason. That trend there is a good reason for demand pull for copper as people like me switch to EVs. My EV's 11 years old and don't use that crude oil anymore. But that's the key point now. It is becoming more, it's economic, it's global, and it's just a distortion in the U.S. The question is, how long can you keep that price on the CME 25% above the LME? That usually doesn't last very long.
Wow. Our commodities strategist drives an EV for 11 years. How about that, Mike? I think we learned something here today.
Well, I couldn't help but adopt that advancing technology, but I remember buying my Chevy Volt in 2014. Now it's the world's shifting so fast. 50% of sales of automobiles in China are EVs, and some of them are cheaper and better than Teslas.
Right. I just like the fact that our commodity strategist never has the smell of gas on his hands, something I didn't realize. Mike, it's great to have you back. Mike McGlone, live from Miami. You'll see him again today, I bet, because he's got a lot to talk about on this copper story. Our senior commodity strategist charging up the EV. Now, as promised, and I suspect there's going to be a lot of talk about EVs among other emerging and mainstream technologies in Sun Valley. Look no further than our friend Ed Ludlow on the terminal today, looking ahead to what's supposed to be quite the blast. I've never had a chance to do this, but pretty cool stuff. Ed writes, hi, it's Ed Ludlow in Idaho. Looking ahead to the annual gathering of the TMT elite at Sun Valley. Elsewhere, the EU is set to rebuke the Italian government for imposing harsh conditions on Unicredit's takeover of Banco BPM. That's your setup. And if you're with us on YouTube or Bloomberg Originals right now, look at Ed. Look at this glorious view he has today. It's great to see you, Ed. Thanks for taking time out of this Sun Valley conference. It's not just the tech bros and the tech titans who are there. I saw some pretty bold faces walking in. We understand the Treasury Secretary is on the ground with you too. What's he up to?
Yeah, I find that super interesting. I mean, when last I was here in 2024, Commerce Secretary Gina Raimondo at the time, then serving as Commerce Secretary, was here, and she was talking about a broad range of things from semiconductors to the relationship with China. What I would observe is that Bessent is here. Haven't yet heard what it is he's discussing, either privately or presenting to the group. But in the first edition of the Trump administration, the Trump administration 1, there wasn't any participation that I'm aware of cabinet members coming to Sun Valley. So the attendance of itself, in and amongst everything else that Mr. Bessent and his colleagues are doing on the trade front, is interesting. It's on the schedule, right? So that's an interesting one. But I want to be crystal clear that Allen & Co. is a closed-door conference. It's an off-the-record conference, and as media, we're kind of attending here on the sidelines. So we do some good reporting, but that is one political setup here, as well as everyone across TMT on their desk right now. Geopolitics is really, of any CEO investor, is what they're trying to get their head around.
Well, when you talk about Altman, Iger, Cook, and Bessent all sharing space in Sun Valley, do they have relationships that go back to his time as a hedge fund manager, or do they know him as a member of this administration?
So it's a good observation. I don't know specifically, but that's kind of the makeup and composition of those that attend. So you do have the CEOs of the largest publicly traded and private companies. You have Allen & Co. at the core of it. Many of those Allen & Co. bankers regarded as Silicon Valley's favorite bankers. And then you have those that are anchor investors in the world of technology. It's not uncommon in years gone by to have a pre-IPO company present to the room the bigger picture. Why? Because you have all of those people there. There is a regulatory aspect. There are the core investors. But also, it's just like power plays, right? You know, there are many technology conferences throughout the year. The difference on this one is that in all facets of running a tech company or a media business, you have all the people you'd most likely want to speak to in one place for just 3 or 4 days. You can get a lot done.
You mentioned geopolitics, Ed Ludlow. What are people talking to you about in the quiet conversations? When you say geopolitics, are you talking about trade and tariffs, or do you mean war and peace in the Middle East or Ukraine?
Yeah, I think the former. You know, right now, particularly given the presence of hardware-related companies and consideration of supply chain, there is still no sort of definitive answer on tariffs, right? Headlines, you do them on Balance and Power every day, change. You can look at where tariffs are present day as announced by this administration versus April 1st, for example, and be like, well, where have we gone in this? And it's difficult to keep up with. Tim Cook is here, of course. We know that various cabinet members, including Peter Navarro, as an advisor to the president, have been commenting on the lack of action from Apple, from the administration's perspective, in moving their supply chain to the United States and assembling the iPhone here. From Apple's perspective, there's no evidence that they intend to do so. But that is one factor here that people discuss.
Yeah, that was an interesting line today, and I'd love to close with you on that, Ed. Peter Navarro saying that Apple, he was on Fox Business, Apple thinks it's too big to tariff in some sense, and it's used that line. Is he actually correct?
Well, Apple has resisted the urge to comment publicly either on the president's statements about Apple's need to shift the iPhone production here or face a specific tariff, and indeed Mr. Navarro's. The way that Tim Cook has long framed this is about supply chain. So if you go to the biggest Foxconn facility in mainland China, it is not just that there's that one single facility, but all of the key components in the associated supply chain have their main premises in close proximity to those sites. Cities have been built around the production of the iPhone. That's part one. The second is expertise. China has a very large body of highly skilled and trained tooling engineers. And the analogy that Tim Cook has used historically is that in China, you could fill a football stadium with tooling engineers. But in America, you couldn't even fill a meeting room. We don't have in this industrial base of America presently the skill set to shift that. And that is just historic commentary from Apple. There hasn't been any update on it. But that is what the analysts at least see as the biggest barrier to shifting an iPhone production to this country.
Ed Ludlow, live from the Sun Valley Conference. I just want to run into that scene of mountains behind you, Ed. He's, of course, the co-host of Bloomberg Tech. Ed, great to have you, as always, here on the fastest show in politics. We'll assemble our panel next, right here only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all in the green. Tech stocks moving higher. A rally in several big tech names, spurring a rebound in equities. NVIDIA briefly hitting $4 trillion in market cap. First company in history to achieve that milestone. Right now, NVIDIA up by 2%. S&P's rallying 15, up 0.2%. The Dow up 22, little changed, up under 0.1%, while NASDAQ, the composite index, up 120 now, up 0.6%. NASDAQ 100 index up 0.4%, and the Bloomberg Mag 7 index up by 1%. 10-year, 4.36%. 2-year currently yielding 3.82%. Spot gold up $10 the ounce, up 0.3%. West Texas Intermediate crude up 0.3%, 68.53 a barrel. Brent holding above 70 at 70.32. Bitcoin, meanwhile, up 0.6%, 109,325 on Bitcoin. Well, certainly tariffs very much on Wall Street's mind. As for the economic outlook against the backdrop of tariffs, Nancy Lazar is chief global economist at Piper Sandler.
Well, I think near term, obviously tariffs are going to be the driving force, creating the soft patch, as we're calling it, weaker economic activity. They are near term a negative. We're going to see it in 2Q growth, even though headline GDP will be 2 to 3% in the second quarter. Underneath the hood, if you look at private domestic demand, it's going to be closer to 0.5%. The swing is due to trade, right?
Nancy Lazar of Piper Sandler interviewed this morning on Bloomberg Surveillance. Starbucks has received proposals from prospective investors in its China business, most of whom are eyeing a controlling stake in the operation. Starbucks shares, they're perking higher right now, up by about 0.2%. And Hims and Hers Health shares higher after the telehealth company announced plans to expand into Canada next year. HIMS on the ticker, Hims up now by 2.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. He's watching tariffs too. Once again, here he is, Joe Matthew.
You said it, Charlie. Thank you so much. Charlie Pellet, live from World Headquarters in New York, every day here as part of our program on Bloomberg Radio, Satellite Radio, Channel 121, Bloomberg Originals, and YouTube, where you can find us now by searching Bloomberg Business News Live. I'll tell you later about the podcast. We've got all the platforms covered here on Bloomberg with a lot to talk about. Another batch of letters out today. That's the breaker. As of high noon, we always have something new for you here. That's why you join us on Balance of Power. Different batch today. Algeria, Libya, Iraq, 30% tariffs. Yeah, Libya, 20% for the Philippines. And of course, we've got the 50% on copper that's hanging out there. The president's also promised, or maybe I should say threatened, up to a 200% tariff on pharmaceutical imports. But those don't come yet because it's not deadline day. I thought we'd have a whole thing today, a special, the 9th of July. But of course, the president delayed the tariff deadline till the 1st of August and then told us it was never actually on the 9th of July. But I'm pretty sure it was. Now, he's got the big, beautiful bill signed into law, and there are a lot of questions about, well, what comes next? Are we just going to send out letters for the rest of the year and tangle on trade? No. There are going to be clawbacks as well. This is the next phase for Congress. And this has been simmering for a minute. There are questions about whether it's going to work. As the program today is brought to you by the letter R and the word rescissions. We talked about it yesterday with Mick Mulvaney, former founder of the Freedom Caucus, former White House acting chief of staff, used to run OMB. What's next, we asked, if anything, for Congress to get done? Here's what he said.
Is there any other legislation going to get passed? No, and especially if the rescissions package passes. Keep in mind, and I lose track of the days, I think the rescission package dies.
July 18th.
Okay, yeah, 9 days. I had 10 days in my head or something, whatever it is. So, look, Washington is always better at doing nothing than doing something. And if the Senate can sit on their hands for the next 10 days and say, oh, well, we just ran out of time on rescissions, I just don't see them doing it because of the dynamics within that building.
Yes, rescissions. As we talk to Mick alongside Kaylee Lyons, Kaylee will be with. Of course, Kaylee always remembers the deadlines. Yes, July 18th. There's another deadline for you. That's when this has to get done. It's got to be on the president's desk, the statutory deadline to claw back more than $9 billion in spending. Not that easy. It is looking like this bill is probably going to fail because there are Republicans who aren't comfortable with this. Susan Collins is concerned about pulling back money for PEPFAR. This is the HIV/AIDS prevention program from the George W. Bush administration. Others, like Mike Rounds, concerned about slashing money from public broadcasting. Yeah, this is the PBS NPR money in these rescissions we're talking about. Now, if these actually do pass, Mick's point was that Democrats are going to be really upset about this, having already approved that money, and are not going to play ball when it comes time to write a budget for next year. Fast forward to September 30. That's when the government would shut down. There's another deadline for you as we assemble our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us, senior democracy fellow with the Center for the Study of the Presidency and Congress. And I'm glad to say that Lonnie Chen is here, Republican strategist, fellow in American Public Policy Studies at the Hoover Institution, director of domestic policy studies, Stanford University. Great to see you both here. Jeannie, talk to me about this scenario, because Democrats, as you remember, in a budget that also Republicans in some cases voted to approve, thought this money was out the door for things like PEPFAR, for things like public broadcasting. If Republicans claw it back, does that guarantee a government shutdown?
First of all, Joe, it is absolutely on point that you said brought by the letter R, because as you mentioned, it is public broadcasting that is in the cuts in this rescission package. So
He's the only person who understands me.
I get it, Joe. You know, one thing I would disagree with on Mick, I don't think there was any chance that Democrats were going to be incentivized to deal with the Republicans on the shutdown anyway. And I say that wishing they would. I don't think shutdowns are good policy. I don't think they're good practice. They're not good politics. But Chuck Schumer was so lambasted for the last time he dealt with he averted the shutdown. I can't see any way in which they come to save Republicans on this. Democrats are in a terrible position on the shutdown. So they're going to be upset about the rescissions. I do think there's a chance that does pass, because as we heard from Kennedy the other day, Donald Trump's going to be so upset if it doesn't. That usually means the thing will pass in these days. And of course, Democrats are going to have to swallow that. And they're not going to, I don't think they're going to find their way to helping Republicans keep the government open, because if they do, their base will go absolutely crazy.
As usual, Jeannie points us right to it. The comments from Senator John Kennedy of Louisiana. Lonnie, check this out. He predicts another Trump eruption, as he put it, if this bill fails. If Republicans in the Senate do not pass the rescissions package after all the rhetoric about reducing spending, he tells Politico, then they should hide their head in a bag. And I think the White House, he said, will provide the bag. Lonnie, is he right?
I think he probably is. I mean, from a political perspective, it will be very, very challenging. I think Republicans have been making these arguments around deficit reduction. And after passage of the bill, the large reconciliation package, it is probably incumbent upon Republicans to follow through on some of that. I do think that ultimately this is going to be the last, sort of lasting image as we go into the midterm elections next year. And if, I don't, shutdown politics tend to cut in multiple directions. I don't think it's as easy as, they always benefit Republicans or they always benefit Democrats. I think the reality is that for neither side is a shutdown a particularly good idea. So we'll see how far the Democrats carry out their threat. Chuck Schumer obviously was going to tie a shutdown threat to pretty much anything. This happens to be tying it to the rescissions package, which is the live ammo, as it were, in the fight right now. But frankly, I just don't know that for either side it makes a ton of sense. Now, Democrats will argue, of course, Republicans have unified control. Let them do it. Let them take care of it. If they don't do it, it's their fault. But these things have a tendency to follow the old axiom that when you mud wrestle with pigs, everybody gets dirty. And that's how I think about shutdowns.
You worked for Mitt Romney, of course, as an advisor, Lonnie, and I bet you remember we were going to cut Big Bird, right? That was something that actually played against Mitt Romney in the campaign in the 2012 campaign. And we're talking about that again here, pulling funding from PBS and NPR. Forget Big Bird for a second. Mike Round says that slashing public broadcasting funding will get rid of, in rural areas, Jeannie, a lifeline for a lot of people, these small public stations that are able to transmit emergency messages. Now, think about what we just went through in Texas. I realize that might not have been a game changer, but this stuff is important. The ability to transmit emergency information, not necessarily entertainment, but information to people around the country here. Do Republicans have enough rural presence to agree on this, Jeannie, or is PBS and NPR about to get cut? And by the way, I used to work in that world. I never took a tote bag home, but I've done my share of pledge drives, and I have a sense of what goes into these operations. What do you think?
I have too, as a listener. I've never worked for one. I think, you know, it's going to be curious to see what happened in Texas, also what's happened in New Mexico, elsewhere, where emergency information, communication is so critical. Does that play a difference? And does the Senate take up, I think what we may see, if it does, is they take this up, they make some changes, they vote, and then they once again jam the House. And I do think it's going to be very, very tough for either the Senate or the House to make the case to Donald Trump after going on and on and on about spending that they couldn't cut just $9 billion, which, you know, I say just $9 billion, not personally, but out of the amount that is in that federal budget, that cutting just $9 billion, how would they, you know, make that case? I think be very tough. But I am hoping personally that PEPFAR and the public broadcasting in particular are saved from those cuts because they're so critically important in so many ways, particularly in rural communities in the case of public media.
You know, Lonnie, Democrats are ready to make the commercials already. First they cut your Medicare, then they cut Big Bird. How does that narrative play in the midterms?
Well, I don't know that the Big Bird piece will matter a lot in some parts of the country. I do think for rural parts of the country that is an issue, and that's why you see Senator Rounds and you see others who represent more rural states speaking up. This is oftentimes the only communications, real kind of broadcast lifeline that you have in many of these areas. It is not just about the broadcasting; it's also about the role that these organizations play in the community as well. So I do think that it's going to be an issue for some. I think, frankly, if Democrats want to use the ammunition they have from Medicaid and SNAP, you know, there's plenty of ways for them to weaponize that without even having to go to the beloved Sesame Street characters. I think the bigger question will be, how do Republicans talk about these issues? My observation has been, so far at least, Republicans haven't done a particularly good job of talking about the benefits of the One Big Beautiful Bill, the ways in which this is actually important for the economy and economic growth going forward. And until they begin to embrace that message a little bit more, I think it's going to be hugely challenging for them going into the midterm cycle, both the politics as well as the optics.
Jeannie, is this a narrative that Democrats are ready to spin?
You know, when we talk about Democrats and narratives, I never say they're ready because it has been a dismal picture for a long time now. I hope they are ready. I think the argument they're going to have to use, as Lonnie just mentioned, is in terms of cuts to Medicaid and SNAP. That becomes particularly challenging because those don't kick in until after the midterm, which means you're going to have Democrats out there saying these cuts are coming, which may not resonate as much. I think a better argument, even given the way that they lined this up for these cuts, may be of betrayal, that this is a regressive bill and you have been lied to by Donald Trump and the Republicans. They have helped the very wealthy and they have hurt the poor and middle class. But again, Democrats and messaging don't go well together these days. And I think, you know, just to Lonnie's point, I heard somebody describe this bill as a tar baby. The only one who's able to talk about it in such glowing terms so far has been Donald Trump. And to his point, that's going to need to resonate to the rest of the GOP out there on the campaign trail for the midterm if they're going to sell this thing.
does make you wonder how many town halls are happening in the home districts right about now, if any at all. We've got a great panel today. Jeannie Shanzano, Lonnie Chen, they're going to be back in our second hour with a lot more to talk about here when it comes to trade and another batch of letters that has just gone out today. We'll take you to the White House for more on this coming up. Libya and Iraq got letters on tariffs today from President Trump. With apologies to the great Carol Spinney in the town of Woodstock, Connecticut. I'm Joe Matthew. We'll have more ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says you've got mail. Welcome to the Wednesday edition of Balance of Power as the White House kicks out another batch of tariff letters, this time to the likes of Libya, Iraq, and the Philippines. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here on Bloomberg TV and radio. On what was supposed to be deadline day, Kaylee, it is the 9th of July. This is when the deals were supposed to be in place. We're now, of course, looking ahead to August with a lot of questions about what these letters are going to lead to.
Yep, August 1st is the date where tariffs will go into effect. The president, at least for now, contending that that date will not change.
Yeah.
But what could change is the tariff rates countries are facing if they are willing to, in the president's words, lower their tariff and non-tariff barriers and open their markets to the U.S. It's 7 new countries that got letters today. The 7th just hit a 30% tariff on Sri Lanka. But of the 7 in total we're talking about here, Joe, it equates for less than $20 billion in imports to the United States. So you have to ask what exactly the point is.
That's right, how much we're actually buying from Libya, Iraq, and some of the others here at hand. It's an interesting moment here in this conversation that we're going to talk about ahead with Bloomberg White House correspondent Josh Wingrove. He's been really leading the charge on the tariff coverage here, asking so many questions, Kaylee, in these encounters with the president. It's difficult to get clear answers here. And we'll review some of this with Heather Boucher from the prior administration, economic advisor to former President Joe Biden.
Yeah, interested to hear her thoughts as well on what we heard from President Trump today regarding the Fed chair, Jerome Powell. He believes the current Fed funds rate is about 300 basis points too high. We keep ratcheting that number of the cut needed higher and higher. So we'll get into all of that this hour, but we begin, as always, with the check on the markets. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Good day to you both. We have got the Dow, the S&P, NASDAQ all advancing. 59 minutes to go until the latest FOMC minutes. We've got the S&P pushing higher now, up by about 15 points. That is a gain of 0.3%. The Dow up 54, up by about 0.1%. NASDAQ up 123, now higher by about 0.6%. Our Mag 7 index rallying by 1%. An advance in several big tech names spurring a rebound in stocks. NVIDIA briefly hitting $4 trillion, the first company in history to achieve that milestone. Right now, we do have NVIDIA at just about 3.995 billion. The S&P 500 index up by 13, gain there of 0.2%. We got the Dow up 43, up 0.1. NASDAQ again up by 0.6%. NVIDIA shares, by the way, they're surging 1.9%. 10-year, 4.36%. The 2-year, 3.87%. And spot gold up $9 the ounce, 33.11, while West Texas Intermediate crude up 0.6%. WTI 68.72 a barrel on crude oil. Merck has agreed to buy respiratory drug maker Verona Pharma for around $10 billion as part of its ongoing search for ways to fill the Keytruda-sized hole that will emerge over the next few years. Shares of Verona, they're surging now by 20.6%. Recapping, NVIDIA up 2%, S&P up 14, up 0.2%. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Watching Wall Street for us in New York, and we'll get back to Charlie for more on the Wednesday trade a little bit later on. It has been quite the item to be watching NVIDIA today. We've got our eyes on copper as well, pulling back from the news yesterday, a 50% tariff on copper, assuming that takes effect in August. Shares of Freeport-McMoRan relaxing as well. But Kaylee, we're looking at a new batch of letters as we were discussing here. We've got 7 so far today. Did the president promise another 10? How are we doing on the count?
I think we're at 21 in total if you count the 14 from Monday as well. But he also said more could come this afternoon.
Right.
So we can't necessarily let our guard down. But when we consider the 7 that we got today, we're looking at a 20% tariff on goods for the Philippines, 25 for Brunei and Moldova, 30 for Algeria, Iraq, Libya, and Sri Lanka. Take all those countries together, the amount that we imported from them last year was less than $20 billion worth of goods.
So you wonder what's going on, because people thought we'd be talking about trade deals with the likes of India, Japan, and others that are not on this list. Of course, Japan was called out with its own letter on a 25% tariff, but there's no rhyme or reason to the timing on all of these, it seems.
Yeah, so let's try to get some more insight now and turn to Josh Wingrove, who, of course, covers the White House for us here at Bloomberg. He's with us in our Washington, D.C. studio. So, Josh, when we consider the countries that we're learning about, their relevance, frankly, in terms of the aggregate trade that they do with the United States, how should we be reading into this when the president suggested it wasn't just tariff letters that were going to hit this week, but deals, and we've heard of no such deals yet?
Well, I know Joe loves Libyan suits, so I'm sorry. Those are up 30%.
Thank you for noticing.
They seem to be doing this regionally as they go through about 5 different countries. They did that yesterday. We're expecting another batch this afternoon. We don't know how many as they go through. Of course, the big fish hanging out there is the EU. They haven't done anything on that, so we're waiting to see what happens there. But right now, Trump is deflecting the criticism that his 90 days and 90 deals have never materialized by saying these are deals. He's just reissuing these numbers. And I think it's important to remember, if you were not watching on Monday or had other things on the go, the letters are fundamentally a delay. That's what they're doing. This is fireworks above a delay. He's extending till August 1st, and then allegedly won't move it again, although he said that 12 hours after indicating he might. And so potentially he could change his mind again, but the most recent statement is August 1st is firm. So these are the latest threats. These numbers are in line with the April 2nd threats that he made earlier. They're just kind of pushing them to, the nearest multiple of 5. Right, exactly. And then from there, they do appear to be grouping them regionally to some extent, but the White House has offered literally nothing publicly by the way of explaining how they're coming to these numbers. Yeah. So the initial numbers were, a very crude formula on trade deficits. These ones are just seem to be
plucking this out of the air.
Yeah.
What do we buy?
Your guess is literally as good as mine, and
yeah, all right.
Where they're coming from.
This is a good exercise. What do we import from Brunei? What are we putting tariffs on?
That's a great question.
Does this seem strange, the collection of countries that we're hearing about today?
Well, the way they came up with the formula, it captured, because it was focusing on trade deficits, it captured a lot of lower wage manufacturers of consumer goods. And those are not countries that they've been focusing talks on. So the letters are being more focused on the countries that they haven't been having talks in, with the notable exception, of course, of Japan and South Korea, who he began with. So,
and as the president
these
says,
are smaller fish by design, in other words.
The letter's the same thing as a deal, he said yesterday.
Letter is the same thing as a deal. Now, the letters are all pro forma, and they include invitations to invest, we'll see, and of course also to negotiate. And so that might still happen. Trump seems to be holding open the door for some kind of deal. But if you were Brunei, for instance, or Libya or Iraq, or one of the countries listed in the last 48 hours, you maybe don't have a lot of more incentive than you did on April 3rd or April 10th to really come to the table and make concessions, in part because of those low trade volumes we talk about. But we're watching to see, what do the South Koreans do? What do the Japanese do? They've got some important elections coming up later this month that is politically complicating things, one would imagine. And then, of course, that EU situation. That's really hanging out there. Remember, China was also in this group, but has been sort of pulled out from that. We're looking forward to that meeting that we don't know where it is, or at least I don't know yet where it is, next month with Greer, Besant, and Lutnick, and their Chinese counterparts. We'll see where that goes. EU run is really hanging in the air.
Well, so it's one thing to consider the kind of country level talks and tariffs. It's another to consider the sectoral tariffs. The president yesterday was talking about potentially 200% tariff on pharma, though that may be out a year or further to allow time for those supply chains to come to the U.S. No such time, it seems, is going to be allowed for copper. Though the suggestion is that too could hit, if not end of this month, on August 1st.
That's right. Secretary Lutnick saying in the coming weeks on copper, we're waiting to see the text on that. That one seems pretty baked. He had talked about a 25% tariff on copper, but of course he imposed a 25% tariff on steel and aluminum and then doubled it to 50. And it seems like he's doing the same thing with copper, where we're going to land at 50%. Copper is also sort of small volumes and concentrated on a particular handful of countries. So maybe there's a chance for some kind of deal there, but Trump has been fixated on this for a while. On pharma, the timeline there is so important, right? Trump talked about 12 or 18 months leeway. I believe it was Lutnick who said 2 years. So that's way down the line, but he's talking about a big number. So that one appears to be, at least for now, more bark than bite. Whereas with copper, we're expecting it imminently. Of course, the big question is that semiconductor one. Yeah. Not only when that's coming, what rate it will be, but how widely they will define semiconductors. Is that a full net, anything with a chip in it? Because that is a lot of stuff. And then we're talking about a tariff on every phone, computer, television, every fun thing you buy at Best Buy.
I know this is out of left field, but if you listen to that entire cabinet meeting, the last 15 minutes or so were about the interior decorating in the cabinet room and throughout the White House that the president was taking personal credit for, and was deeply involved in touring those in the room through the presidential portraits, complete with his own kind of summary of what each president was known for. the gilding that we saw in some areas, the frames, the lamps, the medallions that he had added. And you wonder about his worldview from inside the White House when he talks about America being in the Gilded Age, another golden age, or make America great again. Is this not informed by his actual surroundings inside the mansion?
Well, let me add, if you open the curtains behind him that you're looking at, you would see a rose garden that's being torn up
right,
and
yeah.
redone
What do you make of
so
that?
he's making changes.
You've covered multiple administrations.
He's putting his stamp on it. Well, President Biden did not affix gold to the fireplaces.
He didn't.
President Trump has affixed gold to the fireplaces. He's making it look more and more like Mar-a-Lago. I mean, anyone who's seen photos of Trump since the 80s knows he loves that kind of look and that kind of gold situation. So that's where he is. But, he's definitely more comfortable, it seems, in the White House than he was in the first term, and is making these changes up to and including, we saw earlier this month, the announcement of a UFC fight at some point on the ground.
It's going to be a riot.
Of the White House. So, I don't know, we'll see.
You're going to have a front row seat to that,
We'll
right?
see about that. I was joking last night about whether that will decide the Fed chair. We'll see. Probably not. But this made-for-TV quality of Donald Trump persists.
Amazing.
That is like the least newsy statement I can make,
Yes,
I think.
well,
But he continues to do that. But yeah, he's pretty proud of the change in the cabinet room. It is what it is.
Thank you, Josh.
Got those great big flags on the north and south lawn as well.
They're really big flags.
They're so
They're very big.
They're
yes.
really large flags.
Like you see on the Auto Mile.
Yeah.
Are those flags too big to tariff, or is that just
That's a fair, I think those are made in the USA.
Yeah, there you go.
Josh Wingrove, we thank you as always, Bloomberg White House correspondent. Can we get to the panel here, you think?
I think we should,
All right.
yeah.
Lonnie Chen is with us, Jeannie Shanzano, Bloomberg Politics contributor, and of course, senior democracy fellow with the Center for the Study of the Presidency and Congress. Lonnie is our Republican strategist and fellow in American Public Policy Studies at the Hoover Institution. It's great to have both of you here. Lonnie, your take on the trade policy, if there is one, or is this a president who's making this up as he goes?
Well, look, I think it's all about the deals, right? And that has always, I think, from day one been the modus operandi of the president and the White House is to be able to talk about deals, announcing deals. And, in many of these situations, what we really see is a little bit more buffer to get to deals. Now, the particular countries announced today, I don't necessarily think that whether we have a bilateral deal with Sri Lanka is going to make or break our trade deficit. But certainly, I think about the bigger countries like Japan and Korea, where the situation started off very optimistically. If you look back to when we were first talking about doing trade deals with a number of different countries, Japan and Korea were often named as two countries that we thought right out of the gate would get good treatment initially. And we've seen now that those negotiations are dragging a bit. So I really see these letters in some ways as an invitation to really come to the table just one last time. And let's see what comes of it. I do tend to think that we will see progress made, particularly with Japan and Korea. But it'll be interesting to see. There's a few other countries. We don't have a lot of clarity on the European Union yet. We don't have clarity on Taiwan yet. So there's still some countries where I'm waiting to see what comes of the president's announcements in the next couple hours, I guess, here on July 9th.
Okay, so Lonnie sees these letters as an invitation to come to the negotiating table to try to make a deal. Jeannie, the president characterizes these letters as deals in and of themselves. Can we really say that an agreement has been made between the U.S. and any of these countries who are on the receiving end?
I like the way President Trump does things. I want to tell people I'm negotiating with, listen, I'll send you a letter, and then that's pretty much it. The negotiation is over. Of course not. And as Lonnie mentioned, even on the two where we were told there was a deal, Great Britain and Vietnam, we still don't have a deal. It's more of like a promise for future talks. Or we don't have the details, I should say. I think when we look at the president's policy here, we have to judge it based on the way the administration says it should be judged. And they have talked about all of these goals, from reshoring to protection of national security to raising revenue. And Scott Bessent talked yesterday about the fact that a lot of revenue has been raised so far, and he's absolutely right. But most economists tell us that that'll be short-lived. And of course, any revenue coming in the long term is a tax on Americans, and it's a regressive tax on lower income Americans. So by that one measure that they themselves set out, this policy is very, very troubling, particularly from a president who's touting a win on the big, beautiful bill because it cuts taxes. And yet on the flip side, with all of these tariffs, he is raising taxes on Americans who simply cannot afford them. And so from that perspective, I call foul on all of this. And you can look at the other 4 goals, and he's not doing much better on those either.
Lonnie, the market had a bit of a hiccup yesterday when the tariffs were first announced, or the letters started going out. The 50% copper tariff hit the tape as well. We're coming back today, and the fact of the matter is we're not that far from all-time highs. I mean, you look at the S&P 500, still well above 6,200 right now. And there is this thought, the taco trade, if you want to call it that, the boy who cried tariff. Is Wall Street smart to just start ignoring this?
Well, I think you're seeing that market behavior already. I mean, if you look back to some of the pullbacks we had post-Liberation Day, there was some real concern that these tariffs might be, quite high in their percentage. They might be quite broadly applied. They might be applied to some critical industries. And, little by little, we've seen some of that posture change. And I think markets are reacting to the fact that the president, at the end of the day, is behaving on all of these things in a pretty rational way, understanding that there are significant implications to significant tariffs, particularly on major trading partners. Now, we'll see. There are some things. He talked about sectoral tariffs, for example, of 200% on pharmaceuticals. If that were to really come into play, that would be a significant challenge for the life sciences sector. I think there's a question about whether that's real or just talk at this point. But so far, at least, I think what markets have seen is, yes, the president likes tariffs. Yes, he likes to talk about them. Yes, there's a way in which he's looking to put tariffs on a broad variety of countries and industries. But at the end of the day, there is a level of rationality, whether you want to chalk that up to what the president's doing or to what Secretary Bessent, who I think is a great advisor on a lot of these things, whoever it is or whatever it is, I think markets have kind of taken stock of this and said, listen, we just don't think that the downside scenario that some had talked about is all that likely. And I think that's why people are maybe exuberant, perhaps irrationally so now, given that we've got several more years of the Trump show.
Well, and when we consider that downside scenario, Jeannie, does that heighten the risk that markets could actually be caught off guard when the president decides, okay, actually, I'm not punting again. This is a hard deadline. These tariffs are real.
Yeah, there is a chance. Hopefully that doesn't happen, but there is a chance because the way I read what's happening is that the market's like the rest of us. We put in, one deadline, scratch it off. You put in another one, scratch it off. I mean, we were all prepared today to be talking about July 9th, this big deadline. And of course, then it was moved. And so the market seemed to be expecting that this is going to probably move again. And maybe they're right about that. And that is, makes sense. But if he decides to keep with this August 1st deadline, hopefully they're not caught off guard, but he could actually do that. And the reality is that if he's talking about targeted tariffs, that might be one thing, but he hasn't been doing that. And he needs to be very clear with the goal here, and he hasn't been on that either.
All right, Jeannie Shanzano and Lonnie Chen, our political panel on this Wednesday. Thank you so much. Of course, Wednesday, July 9th, not the day we all necessarily thought it would be as we look ahead now to August 1st. We'll have more ahead here on Balance of Power on Bloomberg TV and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green, holding on to gains. S&P right now up 20, up by about 0.3%. We are seeing a rally in a number of big tech names, spurring a rebound in the broader market. NVIDIA briefly hitting $4 trillion in market cap. First company in history to achieve that milestone. NVIDIA right now up 1.7%, well off session highs. The S&P up 21, up 0.3%. Dow Industrials also up 0.3%, higher by 133 points, while NASDAQ is up 121 for the NASDAQ Composite Index, a gain of 0.6%. The Bloomberg Mag 7 Index up by 0.9%. The 10-year 4.35%. The 2-year 3.86%. Gold up $10 the ounce, 33.11. Right now up 0.3. West Texas Intermediate crude up 0.7%. WTI at 68.78 a barrel, while Brent crude holding above $70 a barrel. So again, recapping, stocks higher, S&P up 21, up 0.4% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. And back we go to Washington. Balance of Power continues right now. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet in New York watching the markets for us, markets that largely at this time seem to be looking through the president's newly issued tariff threats to a number of countries. The total who have received letters from President Trump at this point at 21, as 7 new ones were issued today with rates ranging from 20 to 30%. And of course, the promise of more to come as we now look ahead to a deadline of August 1st for any deals to materialize. The president suggesting that August 1st deadline is not immovable, though we know that hasn't been the case in the past. And all of that feeds into a relatively high level of uncertainty about what exactly is going to happen with tariffs. Which ones will ultimately be enforced? Which deals ultimately will we get? And that uncertainty is something that the Council of Economic Advisors chair, Stephen Myron, spoke about on Bloomberg Television earlier today.
I do see the uncertainty starting to reduce in the near term. Part of the benefit of uncertainty is it gives us leverage in negotiations, right? Like the president knows how to extract concessions from our trading partners, and he has been very successfully doing so. Now, as what you've seen with a number of these letters is there's some countries that haven't made the concessions that the United States requires, and as a result of the decades of accumulated trade deficits, the president has decided that tariff rates should ratchet back up for those countries on effective August 1st, and I expect that to happen.
I want to talk more about the sectoral tariffs, the Section 232. You look at copper just over the last 24 hours and the price increase you've seen in copper alone. This is a critical input for data centers, for power grids, for industrial machinery. And as the administration looks to bring more manufacturing onshore, how isn't it the case that a 50% tariff would impact some of those other efforts to otherwise power the economy?
So you have to differentiate between changes in relative prices and changes in the general price level. And when you target a specific good with a tariff like copper or some other specific good, you're going to get relative price changes, and that's totally expected. But that doesn't mean that there's an increase in the general price level, by which we mean inflation, because there are lots of thousands of products and services that go into the general price level, and it's an average, a weighted average across all of those. And we just published research yesterday showing that there has been no tariff-induced inflation in a general price level sense since the tariffs began being implemented in January. Quite to the contrary of all of the Cassandras that were shouting that it was going to be extremely inflationary. There's just no evidence of that thus far. Just
Stephen,
like in 2018, 2019. Yeah.
Listen, I read the research, and we'll get back to it, but on copper, I want to read this note from Jefferies. They say that the U.S. does not have nearly enough mine smelter refinery capacity to be self-sufficient in copper. So then why target it?
Well, we need more of it. We need more of it produced domestically. There are certain critical minerals, of which copper is one, that you just absolutely need if you're going to have a manufacturing sector. And having a manufacturing sector is important, not just economically, because it tends to be a high capital, high productivity field with good paying jobs, but also for national security. You cannot defend yourselves if you do not have a robust manufacturing sector, and critical minerals like copper are essential to that. So will we be able to corner a market in copper? Absolutely not. But can we make more than we currently do? Yes.
So how long will that take? I mean, for example, when will these copper tariffs go into effect? Or is this just a stick rather than a carrot that you use to try and motivate the industry?
No, well, the president said we're going to do copper tariffs, and I think the president, and I think the president follows through on his promises. So I would expect them to happen. I don't have a date for that happening. Yeah. Well, I don't have a date for that happening. That process is underway.
Myron, he chairs the Council of Economic Advisors in the Trump White House. As we consider the idea of a 50% tariff on copper against the backdrop of these tariff letters that have been going out to individual countries, and as we've told you, 7 more went out today to the likes of Libya, Iraq, and the Philippines. We add the voice of Heather Boushey to the conversation, not a stranger to Stephen Myron's job. She was, of course, a member of the White House Council of Economic Advisors as deputy director under President Joe Biden, currently senior research fellow at the Harvard Kennedy School. Heather, it's great to see you. Welcome back to Bloomberg TV and radio. We'd like to hear from you broadly on the trade policy or lack thereof that we're seeing in the last 24 to 48 hours, but I'm curious your thoughts specifically on copper and the impact that a 50% tariff would have on our economy. What would this look like?
Well, listen, I mean, the chaos continues. I think that, it's really hard to listen to the current CA chair talk about the kind of economy that President Trump wants to see, but how chaotic this implementation is and how it doesn't make sense in terms of spurring the kind of investment that we need to see all across the United States. I think, you see these price spikes because the president is saying that he's going to impose, new tariffs on copper at this point. But A, we don't know whether or not that's going to stick. And B, that makes it so difficult for investors all across the country and for businesses to make plans. And as the previous segment pointed out, it's very difficult for industries that actually build things to turn on a dime in the way that the president seems to want them to do. Again, the chaos doesn't help, but even if you said, we want you to all change your supply chains overnight, the world just doesn't work that way. These are, they have to be built. You have to figure out all of your new suppliers. You have to make sure that you can produce domestically. And the president, with the other, part of his policy agenda, is stripping our ability to make those investments. We saw the passage of the Republican budget bill that is actually making cutbacks in the kinds of investments around the country that would create those stable incentives for investment. So, what I see is a chaotic implementation of a plan that is not leading to economic outcomes that the president has promised and are likely to lead to more chaos, less domestic production in things that really matter, as businesses just can't quite sort out what the heck he's thinking.
Well, Heather, another economic outcome it hasn't necessarily led to, at least yet, that was expected, is materially higher inflation. And I ask this knowing we're getting a CPI report next week, and the chair of the Federal Reserve, Jerome Powell, has suggested it's this summer that he believes the effect of tariffs will start showing up in price data. Do you expect we start to see that next week? When does it hit?
Well, I mean, here's the thing. Certainly, if you're adding on these tariffs onto the things that people are buying, then prices are going to go up. The question is, how soon will that happen? As you noted, people expected that would start to really be binding in the summer. But it does really depend on whether or not these tariffs stick and where they stick and how much of those costs are passed on to consumers. Given the direction of the economy and all of the concerns that we're seeing from all of the different kinds of soft data, the consumer surveys, the business surveys, it seems like people all across America, consumers, families, businesses, CEOs, are very worried about the direction. So that probably means that they might be holding back. Maybe firms might not increase prices so quickly because they're a little bit afraid of losing their customers, but maybe they will. And we know that these tariffs will lead to probably a one-time increase in prices, and we're likely to see the effects of that coming down the pipeline. But again, it all hinges on whether or not the president actually makes it stick. I think one of the longer-term implications is what this does to investment and jobs all across the country that affects the long-term prices that families see on the things that they buy. And I think that chaos is going to be with us for a long time.
All right, Heather Boushey, formerly of the White House Council of Economic Advisors during the Biden administration. We'll beg your patience, Heather, as we want to go live now to the current White House, where President Trump is answering questions from reporters as he meets with African leaders. Let's listen.
Young, mostly military people, young souls are dead and dying, and it should be stopped. It should be stopped. Very sad to see what's happening. Yes, please.
Sir, can you explain how you calculated your latest round of tariffs? Was there a formula that was used? And do you expect any of these countries to face tariffs as well?
The formula was a formula based on common sense, based on deficits, based on how we've been treated over the years, and based on raw numbers. And we're going to have a couple of more coming out today. Brazil, as an example, has been not good to us, not good at all. We're going to be releasing a Brazil number, I think, later on this afternoon or tomorrow morning. But they're based on very substantial facts and also past history. You look at the past history, we never had anybody in the White House that understood the numbers or were into it like I have. You know, we've taken in hundreds of billions of dollars in tariffs, hundreds of billions, and we haven't even started yet. And it's going to be a great thing for our country, and I think it's going to be a fair thing for the world. And we really haven't had too many complaints because I'm keeping them at a very low number, very conservative, as you would say, number. And we haven't had, I'm sure they will be complaining at certain points, but we haven't had complaints. We've been treated very unfairly by both friend and foe. And friend has treated us very badly. It's not even believable that for so many years, you know, I was using tariffs in my first administration. We had the most successful financially administration that there's ever been. This is going to be much better. But we got cut short with the COVID because I didn't think it was appropriate when, you know, Italy, Spain, you saw the horror show that a lot of the countries went through. So I cut it a little bit short. But we took in hundreds of billions of dollars, and we had the most successful term ever from a president financially. But this is going to be much more successful. Yes, please.
Do you expect any of the countries here to face tariffs as well?
I haven't thought of it, but I don't know. Let's see, I like him, and him. No, I don't think so. Not too much. It's very good. These are friends of mine now. Yes,
thank you for taking our questions, Mr. President. Okay. You talked about the amount of external revenue the country has brought in thanks to your tariffs. Can you talk about how these hundreds of billions of dollars that are getting brought in will help grow the country, and what do you hope to put it towards?
Well, bigger than the tariffs, actually, are the fact that when you charge the tariffs at a certain point, they say, well, we can't pay those tariffs. It doesn't make economic sense. These are wealthy countries, and they or their companies will come into our country and build, and that's what's actually happening. If you had a very low tariff, there'd be no incentive to do that. If you have no tariff, like we used to have, which is so stupid, it's not even believable, but then obviously they make their product, the product in their country. They have the jobs, they have the income, they have the taxes, they have everything, and they just send it into us, and it's jobs that we wouldn't get. Now the wheel is turned. And what we're doing is more important, we're taking in hundreds of billions of dollars, money that we've never seen before. But more important than that, we have a lot of people that would rather not have to pay that. So they're coming in and they're building plants. AI, we're leading everybody, including China, by a lot with AI. They're building their own plant. You heard me say yesterday, they're building their own electric generating plants to go along with the factories or plants that they're building. If they want to do that, we're getting them fast approvals, very fast turnarounds. They're using mostly natural gas to start off, but they're using coal. They have the right to use coal. They have the right to use nuclear. Nuclear's come a long way in the last 5 years. So we're getting them very fast approvals. We have factories and plants building at a level that we've never had in this country before. Yeah.
And secondly, a study from the Council of Economic Advisors. You put it on Truth Social yesterday. It showed that your assessment that tariffs would slow inflation was accurate, and that the prices of imported goods since February has fallen. That your assessment was right, the critics were wrong. Why do so-called experts continually misread your economic policy, sir?
Well, it's not the experts. It's the fake news and a combination of that and the Democrats. I saw an ad on television today on Fox, and it was some ad about, Trump has raised costs. It's the opposite. I actually put out a statement. I brought down costs. I brought down the cost of groceries. I brought down the cost of tremendously groceries. If you remember my first week in office, the press was screaming at me about the cost of eggs. They were 4 times higher than they were just a short time ago. That was caused by Biden and stupid policies, and we got that down. And by Easter, it was normalized, and now it's actually even at a lower price. So when I see an ad like that, it's always good to respond. I feel you have to respond. It was an ad that things are more costly. No, they're much less costly. Yesterday, $1.99 a gallon. There's 3 states were selling gasoline at $1.99. You haven't seen that for a long time. And I brought costs way down. Just about every cost. I can't think of a cost that went up, but just about every cost. So what they do is they lie. I mean, they take ads. You'd almost think that the advertising station would stop it because they know it's wrong. It's such a lie. All you can do is say it's a lie and explain it. I guess I have the ability to explain it at conferences like this, so I like to take advantage of it and do it. But costs are substantially down under the Trump administration. And as you know, Biden had the highest inflation, I believe, in the history of our country. They say 48 years, but regardless, I think it was really the highest in the history of our country. And they were up to numbers that nobody ever saw before. And we have inflation now totally under control. We have a Fed chairman that, if he was doing his job properly, would lower interest rates. But we're bullying through even that. We're doing so well, it's not having that kind of an impact on us. But you want to see a rocket ship? We should have the lowest interest rates, because without us, there's nothing. And we have a strong country now, and we're taking in a lot of money. And other countries aren't even complaining. They got away with murder. They took advantage of a lot of very stupid people that sat in the seat, very stupid people, or people that didn't understand business or something was going on. But hard to believe that they got away with it for so many years. But now, and I'm treating them very fairly. Again, we have countries with tremendous deficits with us, where we have, where we essentially lose a lot of money. And we are changing that around very rapidly. And I think it's about time somebody did it. Yeah, please.
Sir, yesterday you said that you were not sure who ordered the munitions halted to Ukraine. Have you since been able to figure that out?
Well, I haven't thought about it, because we're looking at Ukraine right now and munitions, but I have not gone into it.
What does it say that such a big decision could be made inside your government without you knowing?
I would know. If a decision was made, I will know. I'll be the first to know. In fact, most likely I'd give the order, but I haven't done that yet. Yeah, please.
Can I ask how your meeting with Netanyahu went over the last couple of days, and how realistic do you think a ceasefire is this week?
Well, we're talking about Gaza for the most part. I think we have a chance this week or next week. Not definitely. There's nothing definite about war and Gaza and all of the other places that we all deal with so much. But there's a very good chance that we'll have a settlement, an agreement of some kind this week, and maybe next week if not.
The African Growth and Opportunity Act, which has been central to many sub-Saharan countries having access to the U.S. market, that's due to expire in September. Are you hoping to extend that beyond it?
Well, we'll take a look at that. Yes, please.
Thank you. That's up to Congress to take a first crack at. We know that program's been in place for about 20 years. And at the end result of that, we see a lot of other countries operating in Africa. We still see a lot of tariff and non-tariff barriers in Africa. So I think any discussion about that act would also have to think about how we address those kinds of barriers.
Yeah, Peter.
President Trump, in Alvarado, Texas, a few days ago, 10 people wearing all black allegedly set off fireworks outside an ICE office to lure the officers out so they could ambush them, shoot at them. They had guns and vests and two-way radios. Do you think that this was an isolated incident, or do you think there's a national threat of a left-wing militia that is targeting ICE and CBP?
Well, I think you have some very stupid people in the left who have some money that are making it available to these people, because you look at the guns they had, they were brand new. You look at even the clothing they were wearing, it looked like it just came out of some military shop. So you have some very stupid people that, if anything ever happened, they'd be the first to go. They don't understand that. They'd be the first to go. They'd be the first ones hit. But there is money being put behind people when you look at the weapons they have, the newness of the weapons, rifles that just came out and they have the latest model. So there's something going on, and we'll get to the bottom of it.
And what do you think the penalty should be for these people who are, if they are found guilty, for people
Very
who
stiff.
shoot at ICE officers?
Very, very stiff. Very stiff. A long time in jail, a long time. And one got hit yesterday in the neck, and he fortunately is going to be okay, but he got hit yesterday in the neck. No good.
And what would you think if I read you a quote from a lawmaker who says about ICE to abolish it, to treat them as criminals or anything that is inappropriate and outrageous? And I told you that that was Democrat John Fetterman.
Well, it's, by the way, I assume when you read that, because you paused in the middle, you're going to have to read that again without the pause. Could you read that again, please?
To abolish it, to treat
And we've
them
been
as
listening
criminals
to President
or
Trump
anything
answering
that's
questions from
inappropriate
reporters live at the White House here on Bloomberg TV and radio. He, of course, is in the middle of a lunch meeting with leaders from several African nations, touching a wide variety of subjects there, including geopolitics. He says there's a very good chance of an agreement when it comes to the war in Gaza in the next week or so, also answering questions on tariffs and other economically sensitive matters, including something else he had weighed in earlier on today. The Fed chair should be lowering rates, he said. We should have the lowest interest rates. And it's on that note we turn back to Heather Boushey, who has been patiently waiting here with us on Balance of Power, former White House Council of Economic Advisors, deputy director now with the Harvard Kennedy School. Heather, thank you for sticking with us. If we look back to the True Social post from President Trump this morning, he suggests that the current Fed rate is at least 3 points too high. Now that you're outside the White House and can actually comment on Fed policy and the Fed funds rate, do you see us as being 300 basis points too high?
Well, you can't do all sorts of things that will raise prices and think it's going to end well. So, I mean, that seems a little bit out of bounds, or a lot out of bounds, relative to where the economy is, relative to where the Fed is trying to get inflation, back down to its 2% level. He is, of course, doing these tariffs, which we think will, again, if he sticks with them, raise prices, particularly over the next few months. He's upending supply chains for businesses all across the country. That is going to add to prices and challenges for businesses and for consumers. So, no, it does not seem sensible that we would lower interest rates at that scale that he's talking about at this time. And I think the Fed is staffed by a lot of smart, thoughtful, methodical people who are going to be looking at the data as it comes in and probably give that conclusion. Let me give a caveat, though. There's a lot of, again, soft data coming in, and it has been for a couple of months now, that, consumers, CEOs, businesses are all worried about the direction of the economy. So if we have what I'm already going to name here a Trump session, if we have one, and I'm not saying that we will, but if we do, then of course the Fed will step in. But it seems like in calling for lowering interest rates, the president himself is worried that he's going to cause a recession. He said, a while back that, it was fine if we did one, that, he wasn't worried about that. So I think, in trying to understand where he's going here, I think he's trying to hedge his bets because he knows that everything else he's doing to the economy is chaotic and is not going to lead to the kind of investment and good jobs that people need to see all across the country.
Well, lastly, Heather, then, do you support the idea that the Fed would, in fact, maybe not 300 basis points, but be cutting now if it were not for Donald Trump himself, the man who's demanding the cuts, is keeping the cuts from happening with this tariff policy?
Well, that's a counterfactual that we don't really know. I mean, certainly when President Biden left office in January, he handed over an economy that was, growing and strong and stable. Wages were going up. So, I mean, where we are now is an economy with a high degree of uncertainty. But again, wage growth is now slower. We're seeing job growth. It's still there, but it's a little bit, when you look under the hood, there's some concerns. A lot of that growth last month was in state and local government. That's, how long will that continue? So I think there are a lot of concerns now that we didn't have. So what the Fed is going to do is certainly 100% being influenced by the policies that Trump has taken over the past few months and the management or mismanagement of the economy since then.
All right, Heather, thank you so much for joining us. Heather Boucher, formerly of the White House Council of Economic Advisors during the Biden administration, now with the Harvard Kennedy School. We appreciate it. And we'd remind our audience here on Bloomberg TV and radio that just about 14 minutes or so from now, we'll get the minutes from the Fed's latest meeting. Perhaps could provide some more insight into how exactly the FOMC is thinking about cutting rates and how that may differ from President Trump. They'll be breaking that for you on Bloomberg Business Week Daily just ahead. But we still have a little bit more balance of power to get to here as we assess what we just heard from President Trump answering questions from reporters at the White House, including Joe, suggesting that there is a very good chance of a Gaza agreement as soon as this week, knowing he's fresh off of 2 consecutive nights or afternoons of meetings with Israeli Prime Minister Benjamin Netanyahu at the White House.
With no news, we didn't even see the arrivals on either of those evenings, brought Benjamin Netanyahu in through the side West Wing entrance, the driveway entrance where press photographers cannot see or reporters cannot shout questions. To my knowledge, Kaylee, unless you saw one, there was no readout from the White House on this meeting, and we didn't hear one from Netanyahu's office as well. So it's curious. They were supposed to be talking, to your point, about a ceasefire in Gaza. There's been a lot of reporting that they've been talking about Iran, knowing that there could be further strikes against Iran in lieu of a deal.
Yeah, so we want to get into both of those issues now as we turn to Hagar Shamali, former director for Syria and Lebanon at the National Security Council, now founder and CEO of Greenwich Media Strategies. Hagar, thank you for being with us. As the president suggests there could actually be movement on a ceasefire this week, knowing we have been here time and again before, what odds would you put around that?
Well, as you mentioned, we've been here before, but the reason I would put good odds on this one is because you are hearing a lot of positive openness to this from the Prime Minister Netanyahu and the Israeli government. And there are a few reasons for that. And part of it is pressure that they're facing, but a lot of it is actually when you're following on the foot of the strikes that happened against the Iranian regime and its nuclear program, you're essentially following a strategy where Iran is being put in a box and then you pivot to moving ahead on other things. And that's why you're also seeing talks between Syria and Israel move quickly. So in light of that, right after that, Trump also himself has chips that he can call on right now with Netanyahu and say, look, we were there for you. We came in and we helped you with those strikes. And now you're going to need to go to this. Now, there's another part of this, and that's that agreeing to a ceasefire, which is temporary, is easier for Netanyahu than the second part, which is agreeing to an end to the war. And that's where Trump wants to go, is to get to this so that he can take those 60 days to negotiate the end of the war. Netanyahu doesn't want to get there. He wants to leave the window open to continue attacking Hamas and undermining them. And so that in Netanyahu's mind, it's easier to, at least if he's going to curry favor with Trump, to agree to that temporary ceasefire and kick the can down the road on the end of the war. And so that's why I have some hope that this might actually come through.
What do you make of the silence surrounding these meetings, Hagar? The fact that we're not hearing any communications from either government about what was discussed. Didn't see him coming or going either.
Yeah, it's interesting. I mean, from what I've heard from my White House friends, the meetings have gone well. Obviously, they obviously also chose to put out there the offer of, or the fact that Netanyahu nominated President Trump for the Nobel Peace Prize, right? So they put that part out in the press. I've actually seen this a lot as well, just in Lebanon. Now, Tom Barrack was in Lebanon, and he chose not to comment on the negotiations between the United States and the Lebanese government on the disarmament of Hezbollah. And he actively said, I'm not going to talk about it in the public because I don't want to undermine the negotiating process. So that's, it could only, in my mind, it only highlights the seriousness of it, but also perhaps that they don't want the media opining, debating, undermining anything. They want it to be in secret and then to come out public with it. And to be fair, by the way, that's how they pursued the Abraham Accords, under Trump 1.0. They were very secretive about it. Abraham is different, obviously, but they were very secretive about it until coming out with something real. And so I think it's part of that view, is they don't want anything to leak or to be distorted, and they don't want to chase a narrative that they themselves haven't shaped.
So do you think, Hagar, that they'll wait to actually come out with a deal announcement until both Israel and Hamas have signed on? Because typically, and this was true of the Biden administration as well, you get the announcement that one party has agreed, and then the other one isn't necessarily on board, and the whole thing falls apart.
That's right. Well, it's hard to predict exactly how they'll do it. They don't do it the same every time. But I will say that there's a lot of the discussions they're having are so detailed. So, for example, when they talk about the disarmament of Hamas specifically, and it's to this detail. Well, how are they gonna monitor that? Who's gonna enforce that? Are there gonna be troops on the ground? If Israel is withdrawing from parts of Gaza in exchange for this ceasefire, what parts specifically? They're not going to let go of the Philadelphia corridor. That's the border, for example, between Gaza and Egypt. But there's a lot of discussion of how far they'll retreat to, like, how far into the barrier or the barrier that's being built, that perimeter around between Israel and Gaza. But at the same time, you just had an attack that happened yesterday that was in that perimeter where you had 5 IDF soldiers, I believe, who died and 14 that were wounded, something like that. And so that, again, that in the wake of that, that's not going to bode well for Israel agreeing to those specific details. But when you're talking about figuring those details out, that's what makes it so difficult. But I do think that, as per usual, they're going to have an interest. If Israel agrees to this deal, the U.S. is going to have an interest in saying that Israel agreed to it and that the ball is in Hamas's court. So that's kind of how I expect it to usually go.
Hagar, does any of this work as long as President Trump has a vision of Gaza being turned into a Mediterranean resort town?
I think that, again, this one is something that this is where you're going to see the biggest gap and between the Israeli government and the U.S. government is that Trump has a goal to end this war specifically, and that's where what he wants to use if they agree to this temporary ceasefire, he wants to use those 60 days to get to that. And Netanyahu's made it clear. Now, again, there are many different elements of a deal that might get him to agree to something, but at the end of the day, he doesn't want Hamas to govern Gaza. Hamas has indicated openness to not governing Gaza and to a different government coming in, except the question is, would Hamas secretly be behind that government? Netanyahu also doesn't want the Palestinian Authority being part of that new government in Gaza. It's a policy to continue keeping Gaza and the West Bank separated because he doesn't want to move toward 2 states. And so now the Trump administration also has not made it clear that that's what they're headed toward. They just want an end to the war. But that gap, that is going to continue being a gap. I wouldn't mistake that chasm for undermining the relationship between Trump and Netanyahu. Trump is actually quite honest. When he's upset with Netanyahu, he says it. When he's happy with him, he says it. So I wouldn't view it as something that would undermine the relationship. But I think it's gonna be a gap that continues until Netanyahu himself feels that he has undermined Hamas enough, or that he has retained some kind of capability where the Israeli government can continue going after Hamas terrorist activity as they see it.
Hagar, it's great to have you back. Hagar Shamali, former director for Syria and Lebanon on the National Security Council, knows what she talks about, now founder, Greenwich Media Strategies. It's great to have you with us as part of our conversation on Bloomberg TV and radio. Kaylee, you do wonder if we're going to hear something more about this conversation or maybe news of another meeting. We did, in fact, to Hagar's point, we did see Benjamin Netanyahu. They held a luncheon, brought some reporters in the room 2 days ago, but when he returned for the evening meetings, we never saw the two together.
Yeah, and of course, it's not just meetings at the White House we're referring to. He's met with the Defense Secretary, Pete Hegseth. Right. He met with leadership in Congress yesterday as well. So spending a lot of time here in Washington. We'll see ultimately if a ceasefire is the end result. That's one thing we'll be watching for between now and 5 p.m. when we return to air. The other is more tariff letters. The president suggested Brazil could come today.
Brazil could be next. We're going to spend time with the Deputy Treasury Secretary in the late edition of Balance of Power. Be with us here on Bloomberg TV and radio. See you back here then.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live on radio, TV, YouTube, and Bloomberg Originals. Carol Masser along with Tim Stenivek. And this is a Fed Wednesday on this July 9th, 2025, because we are getting the minutes from the last Fed meeting. It was 3 weeks ago. And so we'll get some clearer commentary in terms of how the Fed is thinking and feeling and whether or not that changes anybody's perspective about what we get from the Fed in terms of rate moves for the rest of 2025.
Expecting those headlines and those minutes to cross any second right now. We'll bring them to you as soon as we do get them. In the meantime, big news in the world of market caps. NVIDIA topping $4 trillion. Trade and tariffs are still top of mind. And the president versus Fed Chair Jay Powell. All that and more coming up over the next hour on Bloomberg Business Week Daily.
Yeah, there's a lot to come to your attention. In the meantime, we do see the Fed, some of the headlines crossing. Most saw risk of persistent tariff impact on inflation. And if you recall, this is something that we've heard in messaging from Fed Chair Jay Powell, that in terms of rate moves, maybe something might have been done if it wasn't for tariffs and the uncertainty about what those tariffs will be. We've got a lot from the White House that has been coming in terms of that.
We certainly do. Another headline crossing, 2 officials said that they would be open to a rate cut at the next meeting. That next meeting happening at the end of this month, so just a few weeks away from that. The Fed also had preliminary discussions about potential changes to the SEP, that is the summary of economic projections. Some officials saw no rate cuts this year. Officials saw tariffs still likely to put upward pressure on prices. Most officials also saw a risk of persistent inflation from tariffs. Many officials said it might take some time for tariffs to raise prices, and several officials, Carol, said immigration policies were reducing the labor supply.
Yeah, there's a lot going on here. All right, so let's get to it, because we've been trying to give our own Stuart Paul a little bit of time to get through those Fed minutes. There's a lot there. A lot of times there's not a lot of new stuff, but sometimes there are some nuances that are really important. He's been poring over those latest FOMC minutes, as we said, from that Fed meeting on June 18th. Stuart, of course, is Bloomberg Economics U.S. economist, and he's here in studio. We know you're going through it. Tim, breaking down some of the headlines, what are you seeing that maybe jumps out that you think is interesting for the Bloomberg audience?
What really matters, as you said, is the nuance in the minutes. And as Tim pointed out, it was just a couple committee members who were open to a rate cut at the coming meeting. Okay, so we're most likely not going to get a cut at the coming meeting. The question is really if we're going to get September and or December. With some officials, some being more than a couple, some officials seeing no rate cuts this year, there's more risk that rate cuts will remain on hold. Adding to the idea that rate cuts are going to remain on hold, many officials are saying it's going to take some time for tariffs to raise prices, and many, which is a significant adjective that's used in these minutes.
We're always looking at the adjectives, right?
That's right. Many are expecting a gradual softening of labor market conditions. So we know that the members of the committee are putting more weight on the inflation mandate. They're expecting inflation pressures to become more pronounced. It's going to take some time. And they are expecting the gradual softening of the labor market, which will allow them to stay focused on inflation in the near term.
Okay, speaking of inflation, officials saw tariffs are still likely to put upward pressure on prices. Stuart, this coming on a day where we heard from Stephen Moran, the White House Council of Economic Advisors chairman, who says there's been no evidence to show that President Trump's tariffs have been inflationary. Do you agree with his assessment?
No. I poured over the CEO's report. They use basically an imputed price index for imports, separate and apart from what we get from the CPI. So it's not like there is this separate goods or core goods import price index that persistently has a wedge to the actual CPI figures that we're talking about. And it's way too early to say that tariffs have had no effect on import prices. When you look item by item within the CPI, and we'll get CPI data next week, it is evident that there are price pressures for things like appliances. There are price pressures for things like electronics, and the members of the Fed are going to be looking at that, as are the staff members.
Hold on, explain that again, because you went over this report from the CEA.
Sure.
What was the math that the CEA used in order to come to this conclusion?
So the CEA attempts to create its own synthetic imported goods price index that is separate and apart from the headline figures that we see in the CPI. That imputed price index looks at the portion of goods that have imported parts. And it then tries to identify a price index that would apply to that imputed set of goods, that set of categories. And that report showed that there is a persistent wedge between the headline CPI figures and this goods CPI synthetic index. But again, it's way too early to use some sort of mathematical model to declare victory over inflation, say the tariffs won't present any sort of inflation pressures. We know that the Fed's internal models look top down and say, what is the average effective tariff rate, which from the time that these minutes were written to today when they are released, the average effective tariff rate went up, right? And so we know the Fed's internal models are going to be marking relatively more inflation today than they did when they were having these deliberations June 18th. And at the time of the meeting, staff members were breathing a little bit of sigh of relief reading from the minutes here. They were marking up their growth forecast and down their inflation forecast relative to what they saw in May. By the time June came around, they saw things as slightly less stagflationary. We know that with slightly higher average effective tariff rates today, relative to June 18th, the Fed's going to be a little bit less easy in their inflation outlook.
Well, it's also easy, like I think about, or interesting, you think about the last jobs report showed strength in the labor market, right?
That's right.
So maybe that also reduces that thought of the stagflationary environment too, or what? Like, how do you kind of continue to layer in everything, Stuart, when tariffs are still a big question?
Well, so we know that many members of the FOMC look at non-farm payrolls and they discount them pretty heavily. The members of the FOMC disregard a significant share of payroll growth that we see because of the BLS's birth-death model, which we've talked about ad nauseum over the past couple of years. The other thing to keep in mind is that members of the FOMC are expecting to see a gradual softening of labor market conditions. And so you might think, wouldn't they be, rest assured, everything is great, the unemployment rate ticked down in the latest jobs report, but it ticked down because of a shrinking labor supply. In the sense of improved balance in the labor market, maybe they could be breathing a sigh of relief, but I would hardly call that a robust and dynamic labor market when unemployment is declining because of weaker labor supply. And furthermore, when looking at the jobs report and thinking about the minutes that were just released right now, wage growth slowed, hours work declined, and the aggregate amount of labor income that was reported in the report based on payroll growth, wage growth, and hours growth was about zero between May and June. And so softening labor market conditions are still evident. They should not be necessarily resting easy because of that June report.
All right, so let's get to something that we've all been reading about. First of all, we know President Trump continuing to criticize Fed Chair Jay Powell. Here's, first of all, what he said from the Oval Office. This was yesterday.
He should resign immediately. We should get somebody in there that's going to lower interest rates.
Do you want congressional
Why don't you call for his resignation?
Do you want congressional Republicans to investigate and pursue?
It's okay with me. I think he's terrible. He's always late. But he wasn't late with Biden before the election. He was cutting him like crazy. It didn't help too much, did it?
All right, everybody, that was President Trump yesterday from the Oval Office. And then today, he was out on social media once again reiterating his call for Fed Chair Jay Powell to, quote unquote, lower the rate and talking about the cost to the U.S. economy by not doing so. Stuart, he says the Fed's interest rate is at least 3 points too high. You have emphasized, right, in the past when he's talked about, bringing it down by 2 or 3%.
200 basis points.
Yeah. If that,
also, go ahead, Carol.
Well, I was going to say, based on your analysis of the U.S. economy, is the Fed behind that much?
No.
Behind the curve in cutting U.S. interest rates?
I don't
and if
think
so, if we have to cut that much, aren't we like in a recession, depression?
So the argument that someone would have to make, for somebody like Trump to make this argument that the federal funds rate should come down by 300 basis points, he's really just looking at something like nominal growth, nominal GDP growth, which was running between 7.5% when the Fed was hiking.
Yeah.
And in the first quarter registered about 3.5% because there was a real contraction, shrinking GDP, and there is still persistent inflation. But the reality is that private domestic final demand growth is still running at an annualized pace. So that's consumption and fixed investment. We're ignoring things like inventories. We're ignoring things like exports, net exports, and the drag from imports. When you look at private domestic final demand growth, it's still running between 1.5% and 2.5% over 2.5 years. And so with inflation risk still skewed to the upside, as members of the FOMC are saying in the minute, the broad swath of members of the FOMC and the staff see inflation risk skewed to the upside. It's no wonder why they're sitting pat. Domestic fundamentals aren't especially bad, and the inflation risk is skewed to the upside. And when that's the case, it would be a bit peculiar to cut rates going into what feels like a persistent expansion.
You know, I think about the way that the president does want to control the Federal Reserve and the rate environment. And I think of a country like Turkey, for example, at a central bank like Turkey, and we've seen inflation rampant. And Stuart, I wonder just about sort of like, be careful what you wish for when it comes to a central bank not being independent. What would happen if the central bank were to lose independence?
Lose complete control over the back end of the curve.
Explain what would happen though.
Yeah, so if the Fed were to step up and attempt to lower short-term financing costs, which is really where they have the most control, and they were to attempt to inject liquidity into the financial system by, let's say, purchasing bonds, it would ultimately lose confidence of investors more broadly in the market, which matter most for controlling long-term rates. Folks would have to start compensating for anticipated inflation, which would be running considerably higher. If the Fed loses credibility that it is committed to its 2% inflation target, investors have to add in additional inflation compensation to long-run rates, and that weighs on financing costs, that weighs on growth, that weighs on investment prospects. So the Fed capitulating to political pressure is really it's an existential crisis for monetary policymakers. There's a sense in which the president pressuring the Fed has the absolute opposite of the intended effect. If the Fed chairman is going to retain any sort of credibility, the president would be better off by suggesting growth is robust, and so you should keep rates where they are. If he were to actually want the Fed to cut, he should be trying to persuade the Fed that, by maintaining your independence, you would be cutting.
Bottom line, not good.
No.
If there's not an independent Fed. Going to leave it there. Stuart, thank you so much. Always breaking down.
Stuart Paul. Doctor.
Did you get your PhD?
Yeah.
In economics?
Years ago, yeah.
Congratulations. How did we miss that?
He's had it.
Oh.
We just don't call him doctor.
Okay.
Yeah.
There's apparently a doctor in the house.
There is. We'll be in touch, Stuart.
Congratulations.
Yeah, if only I had the prescription.
Bloomberg Economics U.S. economist and Dr. Stuart Paul. All right, that's the latest economic backdrop for investors. It's a lot coming at everybody. Let's kind of try and figure out what all of this means for the equity universe. We're watching trade, we're watching tariffs, we're watching a lot of things. We've got earnings just around the corner. Back with us is Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams right here in studio. First, I want to start with NVIDIA hitting that $4 trillion market cap, right? Yeah. We've seen a bunch of Mag 7 names up today. The trade and tariff news continuing, the extension of the deadline, earnings just around the corner. You've got a note about financials. I'm trying to figure out, where do we start? What do you think is most important? There's a lot coming at us.
Too much to cover. This is a blessing, right? Too much to talk about within the equity markets. Let's just start at NVIDIA, and that really brings to mind one of my favorite stats that my team has put out over the course of the last week, and that is we're now at the 100th percentile in terms of the expensiveness of the biggest cap stocks relative to the smallest cap stocks inside the large cap index. We've never before seen this kind of spread in terms of valuations between the biggest and the smallest, even in the large cap universe by itself. It's just extraordinary.
So what does that mean?
I think frankly, I think that we have a lot of liquidity chasing too few assets. And so investors are forced into the equity market, and the only equities that they're willing to buy in the United States are the biggest stocks so far because of the suppressed economic conditions, because we can't get a whole lot of economic momentum.
Forgive me.
It's just the biggest of the big.
Is it because of the rise of private markets and there's a lot of money?
I think that's a lot of it. I think that's a lot of it. And we did just this year start to see a little bit of a recovery in IPO issuance, which should hopefully soothe some of this concentration risk. But it has just been extraordinary, the degree to which investors are buying only the biggest and the highest quality stocks. It's a very defensive signal, really, when you think about it. It's the highest quality, biggest stocks only, and nothing else that is really participating and driving this game.
Does it make you think that we have to think differently about valuations, or is the historical model in some way broken?
Yeah.
Or is this a time where this could end badly because of concentration risk.
Yeah, it can end either way. If we can generate some degree of economic momentum, if we can generate some degree of optimism again in the sentiment figures, you can definitely see rotation into smaller cap, other themes, something else driving growth. But for now, the only thing that investors are comfortable in investing in the United States is the biggest stocks. And it really is such a concentrated theme. What I think we can take a little bit of solace in is outside of the United States, other things are suddenly taking interest, right? You've got defense themes moving, you've got Latin American stocks rallying, you've got pockets of Asia that have done pretty well this year. So there are themes that are emerging outside the United States, some potential recovery budding outside the United States. And even in small cap land, we have seen at least a little bit of activity in terms of IPOs. So maybe we're starting maybe we're at the precipice of finally seeing a rebalance here. But this has been just an extraordinary bull run. From 2022's lows to date, it's just been an anomalous market on so many levels.
So does that make the U.S. market an attractive one? Or when there's so much concentration and money or new money still kind of just going after those big, really favored names, does it mean I don't really like you, U.S. market, but I like you, NVIDIA, and I like you, you know what I mean? Like, I'm trying to understand.
Yeah, I mean, I think in terms of the attractiveness of the market, people are chasing the technicals and chasing the themes, getting drawn into what has worked and only what has worked, while not taking the risk. Which equities are supposed to be a risky asset, right? They're taking the risk only on the technicals and not taking a risk on a fundamental turnaround yet. And you'd much rather see a broader infusion of optimism based on this idea that we're going to have a better economic outlook emerging, that we're going to have stronger growth emerging, and that would be fueled by the smaller cap stocks and emerging themes. But we've got one theme in the U.S. right now, and it's AI.
I want to just, in the last minute that we have with you, talk tariffs briefly, because if we look at some of the rates that have been unveiled by the Trump administration in the last 72 hours, 48 hours, they are very similar to the rates that were unveiled on April 2nd. Yet we haven't necessarily seen equity markets react in the same way. The plunges. To me, that seems like the equity markets might not be taking the tariff threats seriously at this point.
Oh, yeah, I don't think the equity markets are at all taking the tariff threats seriously. I think you're spot on. The
Why
equity
is
market
that?
is, well, because
August 1st.
We had this experience once in April.
He said yesterday he will not extend again.
Well, nobody believes it. You know? And I think that the reality is we had April. You can only have the boy who cried wolf cry so many times before you don't listen, right? And I think we had April. The precedent is April. The precedent is we'll just extend it. We'll continue to extend it. We'll negotiate this. And it's just going to be this long-term sort of drag on the economy that the market is going to presume is not meaningful until we get real economic downside out of it. We had it in April, right? We had our 20% correction on this theme and then got whipsawed right back out of it. So the market's not going to make that same mistake exactly twice. It's got to be some new catalyst. And that to me is if we have any real economic downside emerge out of this, some real earnings downside emerge, then the market will probably start to react. But until then, it's going to default to, well, we have till August 1st now, so might as well just, kick that can to August 1st and see what happens then.
Exactly. All right, good stuff. Thank you so much.
Yeah,
really
absolutely.
appreciate it. Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams right here in-house. Hey, coming up, we're going to talk a little bit about the latest round of trade headlines, a new round of tariff demand letters from the president. We're going to talk specifically the U.S. and Asia trade relationship. That's coming up on Bloomberg Business Week Daily. I think.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A Fed Minute Wednesday. We have got the Dow, the S&P, NASDAQ all advancing right now. A rally in several big techs, spurring a rebound in stocks. NVIDIA briefly hitting $4 trillion in market cap. Right now, we got NVIDIA up by 1.8%. The Dow, the S&P, NASDAQ all rallying. S&P right now up 0.4, higher by 26. The Dow up 166. That is a gain of 0.4%. NASDAQ up right now by 0.7%. The Bloomberg Mag 7 Index, of which NVIDIA is a part, up now by 1%. The 10-year, 4.33%. The 2-year, 3.85%. Gold, little changed, up by $11 the ounce, 33.13, and West Texas Intermediate crude, call that flat on the day, 68.34 a barrel. So again, recapping here, stocks higher, NVIDIA up 1.9%, S&P up by 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily. I'm Carol Master along with Tim Stanovic. There's been a lot going on out of the White House when it comes to possible new tariffs and trade deals, or at least progress too. We did have the president unveiling a new round of tariff demand letters earlier today, with levies set to hit in August on imported goods from partners who fail to reach agreements with the U.S. So he said he would levy different rates on various countries. That includes a 30% rate on Algeria, Libya, Iraq, and Sri Lanka, and a 20% rate on goods from the Philippines. So there's a lot going on. And Tim, we've got a great voice to really talk about what is a really important trade relationship, and that has to do with the relationship between United States and Asia overall.
Wendy Cutler is vice president at the Asia Society Policy Institute. She spent nearly 3 decades as a diplomat and negotiator in the office of the U.S. Trade Representative. She also served there as acting deputy USTR. She joins us from Washington, D.C., where she's managing director of the D.C. office. Wendy, thanks for joining us this afternoon. The president postponed the imposition of those April 2nd tariffs to August 1st. We did learn that earlier this week. What is your read on that?
My read is that they weren't ready to announce more deals. And so here we are. Remember, we were expecting 90 deals in 90 days. We have 2 deals that have been announced, and frankly, the deal with Vietnam seems to be still under negotiation. And so these letters have been sent out informing countries of their tariff rates that will come into effect on August 1. And I think we're going to see more letters, but we're certainly seeing more letters than deals.
So,
a letter is not a deal, in other words.
A letter is not a deal. You do not want to get a letter if you're a trading partner. It's an honor not to get a letter at this point.
Because what? It's pressure?
No, if you don't get a letter, that at least means that you're negotiating in good faith and that the administration thinks there's a way forward with you. I think with respect to the other countries, it demonstrates that there's a lot of frustration on part of the White House, and they're going to take action against these countries if things don't fall into place over the next 3 weeks.
You know, Wendy, I keep thinking about, like, what's the big thing piece? I don't know. Is it 2 years from now, 3 years from now, 5 years, 10, 20? Will we look back at this era and say, wow, we had a president who was really thinking about agreements that maybe weren't in the best interests of the United States and really sent the U.S. on a greater trajectory? Or do we look back and possibly say, wow, this was a moment when the U.S. really just lost its place in the world? Like, how can we start to even think about that yet?
Well, let me respond to your second point, because as someone who has worked closely with our Asian partners over decades, I'm very concerned about the message we are sending them now and its long-term implications. And particularly when a few days ago, the first letters went out to our 2 closest allies, Japan and Korea. Now, granted, they have high trade deficits with us, but they've been great partners, not only with respect to our security relationship, but on economic security matters, including supply chains and shipbuilding and semiconductors and export controls, and just massive amounts of foreign direct investment in the United States. It almost looks like they're getting zero credit for any of that as long as they have a bilateral trade deficit.
In your view, have any of these countries treated the U.S. unfairly?
look, many of these countries have unfair trading practices, and they have unfair barriers that they impose against U.S. exports. Guess what? We do too. And that's why through trade negotiations, you try and get rid of those barriers. But on more, at least during my career, it was more on a mutual basis. It wasn't this kind of one-sided negotiation where we're telling the other countries, this is what you need to do, or else we are going to make it very difficult for you to access our market.
What are the implications, you think, longer term in terms of the U.S. economy because of these deals?
Well, I guess there is an optimistic note to this. I think people over time are going to recognize how important trade is and how trade has contributed to lower prices and to a greater assortment of goods and access to many goods that we would never have seen or have been able to enjoy without trade. But putting that aside, I think that the economic fallout is going to be severe if indeed all these tariffs come into effect. But that said, as a former trade negotiator, 3 weeks is still a chunk of time for trade deals to come together. And so we may see deals coming together, by next month.
All right, and we hope we can lean on you again to make some sense out of those trade deals as they are done. Wendy, thank you so much. Wendy Cutler, she's Vice President of the Asia Society Policy Institute. As we mentioned, she was also a former acting deputy for the U.S. Trade Representative and spent a long time as a diplomat, 3 decades in the Office of the U.S. Trade Representative. All right, folks, that is the latest when it comes to some trade relationships. Now we want to turn to geopolitics.
On that, a Bloomberg opinion piece by Matt Winkler about the nation whose currency, debt, and equity are leading the world in terms of appreciation since the conflict began on June 13th. Here with the reveal is Bloomberg News Editor-in-Chief Emeritus Matt Winkler. He joins us in our Bloomberg Business Week studio. The outperformer?
Israel, to be precise.
I think that's surprising was surprising to me, and it would be surprising to a lot of people, not just because, people don't pay a ton of attention to the shekel as a currency and also to the Israeli market, but why do you think that had such outperformance, especially during a time of conflict?
So, as you say, just a year ago, the prevailing narrative about Israel following the October 7th, 2023 massacre of Israelis, you would have thought Israel was in an existential crisis internally and externally, really, because there were very divisive politics inside the country that distracted it, and then being attacked by Hamas was an external threat. However, as I said, every problem is an opportunity. Israel was able to take advantage of really 2 things. One is its opposition was not united, as it turned out, as people thought. Hamas, Hezbollah, Syria are all proxies, or were proxies, for Iran. And instead of coming together as was anticipated by Sinwar, who was then head of Hamas, Israel was able to take on these proxies one by one until finally we get to what recently has been called the 12-day war, in which Israel prevailed. But it prevailed systematically against Hamas, against Hezbollah, against Syria, and finally, or belatedly, against Iran. And really systematically, to the point where you could say Israel's military might is probably more formidable today than it's been in its 77-year history as a nation. And that doesn't go unnoticed by people with the most at stake, who happen to be investors. So what we were simultaneously witnessing as Israel was carrying out what initially was a defensive operation was, in fact, something that investors recognized as ever strengthening Israel. And that's why the shekel is the leading currency in the world right now. That is why the Israeli stock market, its stock exchange of 35 companies, are leading the world. And it's why its debt as reflected in its dollar-denominated bonds, are also leading the world in performance. And by the way, economists have since recommended Israel's economy, if you like, as the best performing among developed economies this year, next year, and 27.
Well, and that's what I was thinking about, Matt, when I read your story, is that there are situations where an investment asset class or environment changes, the risk profile changes, right? And then there's also, you get into the fundamentals, the economic and business environment. Like, what is that economic and business market environment for Israel that gets to the fundamentals?
Well, before October 7th, 2023, Israel, in fact, economically had a halo. I mean, this is the startup nation that gave us essentially the technology for autonomous driving, if you like. That's one example, but many others as well. So this is a country that's technological might has been increasing ever more so over the past 2 decades. And so it didn't suddenly stop. Not only that, a lot of this technology that we're talking about is very much reflected in Israeli military and espionage, if you like. And so many of the things that happened over the past 2.5 years, for example, these mobile devices suddenly exploding in the hands of Hezbollah, is an example of Israel's intelligence. Again, the ability to completely incapacitate the air above Iran in this 12-day war was also an example of that technology. So it had been there. Right. And if you're an investor, and we're now in the 21st century, and guess what? We're all talking about something called artificial intelligence.
Just a little bit.
Technology is actually the most essential part of this equation.
Yeah.
And, the other part is that so many companies in the world have their assets already in Israel, whether it's Microsoft or it's Alphabet or any of these other technology companies.
Matt, just in the last 30 seconds that we have with you, is the message essentially that investors are sending, Israel is no longer facing an existential threat?
Yes, that is the message. The message is that Israel right now is more secure than it's been in decades.
Is it definitive? Like, is it like?
Well, nothing is forever.
Wait, I just think about the region, right? And I'm going to give you another 30 seconds. Like, right? Like, that's the risk here, though, right?
Okay, but the risk has been taken away. As I said, Iran was formidable because of its proxies. Its proxies have been incapacitated, whether it's Syria, Hezbollah, or Hamas. And now Iran, even when it got into this war, had no help from any of its supposed allies. I mean, you didn't see China or Russia, for example, stepping in and helping. So that tells you something about the state of the world at this point.
Great stuff. Matt, thank you, as always. Bloomberg News Editor-in-Chief Emeritus Matt Winkler. Hey, coming up, working from home, hybrid, what's the truth? We've got the CEO of International Workplace Group. He's going to lay it out for us globally, geographically. That's coming up next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the U.S. stock market off session highs, but holding on to gains here with the Dow, the S&P, NASDAQ all advancing. Right now, the S&P is higher by 0.4%. The S&P up 27. Dow Industrials up 156, now higher by about 0.4%, while NASDAQ is up 156. That is a gain of 0.8%. A rally in several big techs spurring a rebound for equity markets. NVIDIA briefly hitting $4 trillion in market cap. NVIDIA right now up by 1.8%. 10-year 4.33%. The 2-year 3.86%. Gold up $8 the ounce, 33.10, up 0.3%. West Texas Intermediate crude little changed on the day now at 68.37 a barrel. Brent holding above $70 a barrel, 70.18, up less than 0.1%. Linda Yaccarino, who was hired 2 years ago by Elon Musk as CEO of X, is stepping down less than 3 months after the social media platform was absorbed by Musk's AI startup. An Apple chief operating officer, John Williams, is retiring as the company's longtime number 2, marking a major changing of the guard at an already tumultuous time for the iPhone maker. Apple shares today are right now trading down by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the debate over remote work seems to be back. At least, I don't know. We kind of keep hearing some things. It could be here for years to come. At least that's how.
The subway was empty this morning for me.
I see it certainly. Well, and this is a
middle of the summer. Nobody's going to work when it's really hot in New York City. I don't know if that's what it is.
I don't know either.
Is it a funny week? I thought last week was a funny week.
Yeah, I thought last week was
a funny week. Is it funny
week.
until September? Is that how it works in New York in the
Funny-ish
summer?
until September. Okay. Bloomberg actually, earlier this year, they pointed out, though, that we would kind of continue to have this debate. This was after President Trump added fuel to the remote work fire when he called federal workers back to the office full-time. You might remember that. And that followed similar moves by J.P. Morgan and Amazon. And at the time, it did renew some of the tensions between those in favor of in-person work and the cohort that had been working remotely or with a hybrid arrangement since the pandemic. So curious to see what our next guest has to say, because he knows something. He knows actually a lot about this.
Mark Dixon is CEO of International Workplace Group. It's the flexible office company that owns the Regis brand. Mark, what are we all doing? Because Carol and I, we never stopped coming in during the office.
I did a little bit.
You worked from home a little bit?
We
like,
were
for
sent
like a
home.
week.
We were told to go home.
Okay, you were told to go home. I started in the fall of 2020 and came right in.
Yeah, you were here.
What is the reality from your vantage point regarding work from home, hybrid?
Look, this isn't, basically the sort of debate about work from home, hybrid, is sort of not missing the whole point of what's going on. So what's going on is that workplace is changing into a platform where companies, who are the customers, they're the ones paying for the workplace. Not all of them, but a lot of them want to have much more flexibility, in particular in these volatile times. You know, AI, what's it going to do to jobs, blah, blah, blah. Hard to predict the future, hard to go into permanent space. So companies want flexibility. They want it off the balance sheet, not on the balance sheet. They want OPEX, not CAPEX. And they want to be able to find workers anywhere in the country. And, you know, that is what is happening. It's a strong move by corporate America, and it's a worldwide move where the real estate becomes less of something about leases and much more about people using a platform flexibly.
So wait, so help me understand. So a lot more hybrid going on, even though we've got some big, well-known companies saying get back to work. I mean, give us, yeah.
You know, it's not about back to work. This is sort of a trivialization.
Or back to the office, excuse me, yeah.
Yeah, or back to the office and back to work. We're providing offices throughout the United States. You know, 2,000 buildings by the end of this year. So pretty much anywhere you want to work, you can go locally and work. This is about, you know, people workers not wanting to waste 2 hours a day getting to and from an inconvenient office. This is about technology allowing sort of platform work to be a reality. So look, we're in the office business. So we have 1.4 million offices worldwide today. And so we're very much in the office business, but we're in the office business near where people live and in New York City. You know, this isn't about, you know, the only work is done in the United States, in New York City or Chicago. It's done all over the country. So this is about, you know, allowing people to work productively. They can do it at home, but it's quite difficult. For most jobs, some jobs suited to home. A lot of people need an office to be productive. And you know, so it just doesn't have to be miles away. That's all.
For a period of time after the pandemic, when you thought about the relationship between workers and managers, or workers and companies, the workers had the cards or had the leverage because it was tough to find employees. That relationship may have shifted in recent years as the labor market has softened a little bit, as the isn't as tight as it was before. Who do you view right now as having the leverage?
Look, companies always have leverage, you know, because they're the ones paying the salaries, they're the ones paying the bills. So what's driving the change is it's a much lower cost to support someone near where they live than to get them to come to wherever you are. So, you know, companies, this has been driven by companies, not by the workers, just to be clear. So companies want to save cost, in particular today, and they absolutely want flexibility with, you know, you have to say, probably many of the things you're talking about, it's a volatile world. It's harder to predict what the next few years are going to look like, let alone trying to commit to 5 or 10 years hence. So they want flexibility. They want to minimize capital investment. And that's what's driving. It's not sort of this idea that somehow workers have got leverage. You know, if you ask workers, a lot of them will say, yeah, look, I'd love to work near to home if I can. Some will say, yeah, I'd like to work at home. But all of them want to be productive. You know, it's not a sort of this sort of very polarized argument where it's a pull and push. It's a general push by corporations to have a much more effective, lower cost, more practical working environment for their people.
So Mark, when it comes to the real estate model, the commercial, the office real estate model, is it going to be then, in your view, from what you are seeing, your vantage point, that it's more about not company XYZ building this massive headquarters and then maybe, you know, satellite offices around the country? It's more about maybe having a headquarters somewhere, but then they're more likely to rent space from you. Is that increasingly what you're seeing? And so there will still be demand for office space, but you will be someone who owns more of it than maybe company XYZ.
We don't own any of it, just to be clear. So,
you don't?
No, we don't. We operate it for landlords. So landlords also can see the future. It's a technology distorted future where you can work from anywhere. We all can. And so, you know, the demand has changed. You know, that's the reality. So we work for building owners to convert their buildings and put them on our platform to make them available for people and companies that want to buy what they need, when they need it, for the time they need it, with, you know, a simple, you know, half a page agreement. There's no leases. Okay, so it's the modern picture of real estate.
It's like Uberization, right, of office space almost.
Yeah, absolutely.
So you have a good picture.
Yeah.
We only have about 30 seconds left. You have a really good picture of demand for this stuff, which I think we can use as a source of data on the economy, at least anecdotal. How would you describe demand right now?
Very strong. I mean, look, we're growing. We're adding 1,000 buildings a year. We expect it will be 50% more next year. You know, that's demand for you. And you look at our revenue growth and so on. That's how you can see it.
Interesting stuff. Always, always. Mark Dixon, thank you so much. CEO of International Workplace Group. By the way, their ADRs that trade in the U.S., it's a $3 billion market cap. They're up about 45% year to date. You take a look at the stock that trades on the London Stock Exchange, up about 35% year to date. So investors definitely interested, Tim.
Investors interested in buying stocks today, too. The S&P 500 up 0.4%. The NASDAQ Composite up 0.7%. The Dow up 0.4%. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. I'm Carol Masser along with Tim Stenovec. Quick check on the market trade. We're definitely off our best levels of the session, off our worst levels of the session. So what does that mean? We're up about not quite 0.5% on the S&P 500. Dow Jones Industrial Average up 0.4%. NASDAQ 100 outperformance. We've seen the Mag 7. We talked about it with Gina Martin Adams earlier. That index, Tim, it is up 0.6%.
T-minus 6 days, Carol Masser. JP Morgan earnings.
I know.
Kicking it off. We'll get Bank of America the following day. Good read on the consumer.
Our focus will shift to earnings.
Absolutely.
Ish.
I mean, and then the Fed meeting at the end of the month, but I think we'll
with
get a lot of numbers from companies before then.
Well, now that we've got the deadline on trade and tariffs, right?
August 1st.
Like, now we shift to earnings.
So, some people, I will tell you, there were some people on our show over the last 2 days who have said that August 1st deadline is a sticky one. That will not move.
Well, we'll see. I mean, it certainly gives them more time.
Gina says the market, Gina Martin Adams says the market doesn't believe that.
Yeah. I mean, fool me once. I don't know. We'll see. We'll see. At some point, you got to get these things done if you're going to do it, or you move on, right? I guess. I don't know.
It's like dating.
It's
right?
Speed dating.
It's like marriage.
Equals speed trade and tariff.
I don't know.
This is why I love this guy. I'm Carol Masser, along with Tim Stenovec. Let's take a look at some stocks on the move today. Bloomberg News cross-asset reporter Isabel Lee is in the house. Let's start with AES.
Definitely. The power firm is exploring options, including a potential sale, sources told Bloomberg, and the stock is jumping. The ticker is AES, and you see shares soaring almost 20%. That's the highest since November 2008, if my SINS function is correct. So AES provides renewable power to tech giants like Microsoft, Amazon, and Google. So investors, including Brookfield and BlackRock, have been studying AES ever since the company shares really lost half of their value in the past 2 years. And of course, that's as President Donald Trump has put in place anti-renewable policies. So get this, AES has an enterprise value of around $40 billion. So even a leveraged buyout would still rank it among the biggest of all time.
It would be massive.
It's a massive company, actually. Maybe just not as known in consumer-facing world, but really, I think it's an $8 billion market cap or even more right now.
Almost 9.4 billion.
Look at that.
Especially with the bump up today.
Yeah.
So they've got a fleet of renewable power assets, including wind and solar, as well as 2 utilities in India and Ohio. We did hear yesterday during the cabinet meeting, the Secretary of Energy, Chris Wright, and the president essentially speaking to each other about the need for more oil and gas in the U.S., fewer renewables.
I just think it's fascinating, right? Utilities, energy, like that has become such a go-to trade, I feel like, or increasingly because of all of the power demands, whether it's from the hyperscalers and AI, but it's just an interesting trade. You know, hopefully people working at those power and utility companies are drinking a lot of coffee. You know, those are important things to keep running.
Are they drinking it at Starbucks?
That was a terrible transition. I'm so sorry.
I love it. You do need coffee because we have a lot of power needed. To your point, from AI and crypto, but we have Starbucks, SBUX. Shares are kind of flat right now, but Starbucks has received proposals from potential investors in its China business. So that's according to people familiar with the matter, and most of whom are eyeing a controlling stake. So China is the second largest market of Starbucks, and Bloomberg reported in May that the company had kicked off a review process. So obviously now they're sifting through those reviews and really shortlisting prospects. So this isn't Starbucks' preferred option. They obviously preferred to sell a minority stake to help them grow their China business, and we have TD Cowen estimating that Starbucks China operations could be valued at a range of $2.6 billion to $4.7 billion if the coffee chain is sold. So really, Starbucks has grappled with sluggish sales in China because there have been many rivals and just, a lackluster consumer demand. And they've been catering to the taste of the local market. They've been slashing tea prices. And
don't they drink a lot of tea?
Yes, tea. And they've been offering sugar-free options, zero sugar.
Yeah.
So there's that. But really, it's been a struggle for them.
Initially in the trade today, there was excitement about this.
Yes.
Shares were up as high as 3.1%, but they've given back some of those gains.
I guess uncertainty, or maybe the $2.6 billion to $4.7 billion isn't what they were expecting. We have CNBC reporting that it could be as much as $10 billion. So the disparity is quite huge.
I also think it would get rid of something that's been quite an overhang on this company, because I feel like every time Starbucks reports, we're like, let's take a look at the Chinese sales, right?
Think about what we were talking about a decade ago. It wasn't an overhang. It was the business and the growth engine.
Exactly.
It was like, how is China doing?
Yeah.
The stats about how many stores they were opening up each day.
Yeah.
It was wild.
So what a...
I do love Starbucks because it tastes the same all over the world. So if I drink it in Asia, it's the same as opposed to here.
I like local coffee joints.
Okay, Starbucks has a market cap of about $108 billion. Kind of pales in comparison to the next stock we're talking about.
Exactly. I think this is a stock of the day, NVIDIA. Shares are up just around 2%. The ticker is NVDA. So it's the first company in history to achieve a $4 trillion market cap, really cementing a status as the kingpin in the AI space, in the tech space, and just in the global financial market. So earlier it jumped as much as 3%, and that's what brought it to that milestone. It's just a stunning rebound. Remember DeepSeek? I guess no one thinks of that anymore. Really, the stock has risen more than 20% this year and up more than 1,000% since the beginning of 2023.
This was a $4.91 a share stock back in March of 2020. I'm just saying.
2023 shares were up 239%. In 2024, shares were up 171%.
I wonder how you're feeling if you're Jensen Huang. And we have Bloomberg's story saying that he is meeting top Chinese leaders as he attends an expo in Beijing. So we can connect it back to Starbucks in China.
Well done, well done. Bloomberg News cross-asset reporter Isabel Lee. Check out our Stock Movers podcast, 5-minute episodes. You can find it on Apple, Spotify, or anywhere you get your podcast. Do not go anywhere. On television, Bloomberg's The Close coming up.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The death toll in Texas is at 120, with 160 people missing. The work to find flood victims isn't getting any easier. Fire official Razor Dobbs.
There's massive debris fields, some 50 feet high, 300 feet long. Now, since we have a little bit of drying out, we can get some heavy equipment to where we can start picking through these debris fields.
They're urging private citizens not to do so on their own because victims may be trapped in that debris. As for what precautions had been taken for severe weather and whether camps in the area were alerted, many of the victims were at a girls' camp along the Guadalupe River. CBS's Jason Allen has the latest.
Just 2 days before the flood swept through, state inspectors signed off on the camp's emergency disaster plan. Now, that required that they have a disaster plan, that they have an evacuation protocol, and the camp met that. It was only required that they post that plan in buildings, that campers were instructed on it. It's not clear exactly what the plan was or how closely they were able to follow it the morning of the flood.
In Ingram, Texas, Hannah Reyna says she's grateful to have survived, but she and her kids lost everything.
The hardest part is probably seeing all of your stuff go away, you know? Everything that they grew up with is gone.
3 people were killed yesterday in Ruidoso, New Mexico, after heavy rain sent the river there rising to the highest level ever recorded. CBS's Chanel Call.
Officials are saying it could be days before services there are fully restored. We're talking about water, gas, electric power. So many residents there do not have access to those essential services.
President Trump continues to focus on ending the war in Gaza. Linda Kenyon reports.
President Trump says probably soon.
There's a very good chance that we'll have a settlement, an agreement of some kind this week, and maybe next week if not.
Special Envoy to the Middle East, Steve Witkoff, has stated the agreement could include a 60-day ceasefire between Israel and Hamas, along with the release of 10 live hostages and the bodies of 9 deceased.
Trump sent out more tariff letters today to smaller countries, but the list is growing. CBS's Nancy Cordes has that.
Even though these deals typically would take months, if not years, he wants them completed in the next few weeks. And some of our trading partners have already indicated they want to get those deals done as well because they want to avoid these really punishing tariffs.
Chipmaker NVIDIA today became the first publicly traded company to surpass $4 trillion in market valuation. It's now worth $900 billion more than Apple. On Wall Street, stocks are higher. This is CBS News. New medical advances have reduced the risk of re-injuring your knees. CBS News correspondent Christopher Cruz has that.
Now 17-year-old Nicholas Pahorilenko was a tight end on the football team at Council Rock South High School. 2 years ago, he tore his ACL when another player's helmet crashed into his knee.
Literally couldn't walk.
A tear or rupture requires surgery and a long rehab. Dr. Summer Hamoud with Rothman Orthopedics is using new technology that prevents the repaired ACL from being overstretched and tearing again.
That is likely going to have a huge potential benefit to the patient.
Christopher Cruz, CBS News.
Check your phone in bed at night with the lights out. The artificial light we're exposed to at night is taking a toll on our health. Research in the journal Brain Medicine found it negatively impacts not only our sleep, but the immune system, metabolism, and even our mood. Reducing screen time can obviously help reduce those effects. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. You are just about 55 minutes away from the close on this Wednesday, July 9th, 2025. Carol Messer along with Tim Stenovec here in our Bloomberg Interactive Brokers studio at Bloomberg headquarters in New York City. Bouncing around the equity side of things, but there's green across the screen. In terms of yields, it's been kind of interesting because we saw yields all along the curve really move down. You're looking at, 433 on the 10-year right now, 385 on the 2-year note, but we saw that earlier today. So that is our trade.
That is our trade. On the S&P 500, we're just shy of records, about 0.4% off of those records reached on July 3rd.
Yep.
Just a week ago.
Yeah, it's kind of interesting, right? We just continue to kind of inch higher and higher.
Hey, we're kind of going all in on tech today from a lot of different angles. Big changes at Apple. Number 2 out. We'll talk to Mark Gurman about that.
Feels like a big deal.
Also big changes at X.
Yeah.
Linda Yaccarino out.
Yeah, 2 years in, 2 years now, she's gone. Fascinating, right? Just the history of formerly Twitter, now X, public company, private company, Elon, changes. I don't know where it goes from here.
Well, speaking of Elon Musk, he fires back at a prominent tech analyst on X.
I love when they get into spats.
That analyst joins us a little later this hour. Are his feelings hurt?
I don't know.
He told him to shut up.
Yeah, I know. Not nice.
He said that.
I mean, at least speak civilly, right?
Yeah.
I'm just going to say. Hey, NVIDIA, $4 trillion market cap stock, first to do it ever. It stepped back below that, but nonetheless, that's a pretty big number. So we're going to dig into it. I don't know. Let's talk about NVIDIA, its future, and where it all goes from here.
Also on tech, the India Made in China playbook that's helping an Indian manufacturing boomtown grow.
All right, lots coming up in the next 2 hours right here on Bloomberg Business Week Daily. Let's get you going, though, with a little bit more on the market trade. Here is Charlie Powell.
Hi, thank you very much. What a great lineup, by the way. Do we have great radio here at Bloomberg?
We do.
Right, fascinating topics. And Ari gets a lot of credit for that. The Dow, the S&P, NASDAQ, all advancing. Got to begin with NVDA, NVIDIA, $4 trillion market cap. Briefly earlier today, NVIDIA right now up 1.7%. The Dow, the S&P, NASDAQ, all pushing higher. Our Mag 7 index up 1.1%. We've got the S&P up 29, up 0.5. Dow Industrials up 179, up by about 0.4%. Nasdaq Composite Index up 164, up by about 0.8%. Your 10-year 4.33%. The 2-year 385 right now. Gold up $13 the ounce, $33.15, up by about 0.4%. And West Texas Intermediate crude little changed on the day, down 3 cents now, 68.30 for a barrel of WTI. Bottom line here, stocks moving higher. The Dow, the S&P, NASDAQ all advancing. Ethan Devitt is Chief Global Market Strategist of Mineta Group, and on surveillance this morning, she talked to us about the rate cut outlook and U.S. markets.
Even though maybe 1 or 2 cuts are priced in, I still think when those cuts come, it will give a boost to performance because, if anything, because the underlying economic state is quite healthy, these cuts are really the icing on the cake, as opposed to being something really critical to making this economy be sustained till the end of the year.
Ethan Devitt of Moneta Group. Merck buying respiratory drug maker Verona Pharma for around $10 billion. Merck up 2.8%, and the acquisition target, Verona Pharma, surging by 20.6%. Recapping NVIDIA, up 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. NVIDIA making history today. The market cap topping $4 trillion. The chip maker becoming the first company in history to achieve this milestone. Ian King is Bloomberg News U.S. semiconductor and networking reporter. He joins us from our San Francisco bureau. Ian, just remind everybody how long you've been covering the semiconductor space.
Quite a long time, more than 20 years.
More than 20 years. NVIDIA more than 20 years old as a company. It's gone through many different iterations. This iteration now is the one certainly that's getting the most attention. Is this company a cyclical company because it's in the semiconductor space? Is this part of the cycle right now?
I mean, there are a couple of ways to read that. Every company in the semiconductor industry is a cyclical company because the semiconductor industry is by its nature cyclical. How long these cycles last, when they peak and trough, that's something that a lot brighter people than me try to pick and choose from, and that's how you make your money as an investor. What we can say is, just by the numbers alone, that it's in unprecedented territory. Where its revenue is, not to mention its market cap, as you just pointed out. We've never seen anything like this.
Does it make sense to you, someone who understands this industry and has followed it for so long?
I think you have to just fall back on the numbers, Carol, and let investors decide whether it makes any sense. So on a price to earnings ratio, 52 times, doesn't sound totally crazy, and that doesn't even get it into the top 10 list of semiconductor makers. So relatively, it's not that expensive. No other semiconductor company has ever had more than $100 billion of revenue ever, not even Intel at its peak.
Yeah.
NVIDIA blew past 120 last year. This year, it's probably going to be closer to 200. So again, the numbers say it's achieving more than any other chip maker has ever achieved, and it's still doing that at a relatively profitable rate.
There's also a report out there, I think it's the FT today, and it's NVIDIA planning to launch a new AI chip design specifically for China as soon as September, with Jensen Huang, of course, planning to visit to reassert the company's commitment to the country. Again, I'm just reporting what FT is saying. I'm just curious what you're hearing about that, or is it also just a sign of him trying to kind of continuing to figure out his next market move and where he needs to be, and making sure he's kind of getting to all the possible customer audiences that are out there?
I think the way to look at that kind of reporting and the reporting that we've done on this area is this is the one kind of cloud on the horizon for this company, which is China is the largest market in the world for semiconductors. That country and its companies want to spend a ton of money on AI infrastructure. They cannot spend money on NVIDIA chips because of the US government. So Jensen is going to probably be in Washington soon, going to be in Beijing soon. He's doing lots of shuffling between the two because he has two masters to please, one that controls what he can do, the other that can arguably pay his wages to a large extent. They were already losing billions of dollars in revenue that they can't, because they can't sell into China. So this, is symptomatic of what he has to do. He has to find a way through this, and that'll, make their growth even better than it is right now. Long term, he's saying and arguing vehemently about this, that, look, if we can't do business in China, they'll find another way to do this, and that will hurt us.
Well, speaking of China, perhaps the perfect segue to talk about today's big take. It's a Bloomberg exclusive. It's an analysis that shows how China is building giant data centers in the desert to fuel its AI ambitions. And it's looking to buy 115,000 banned NVIDIA chips to power them. Ian, you were one of the reporters who worked on this piece. How is China going to get its hands on these chips?
I mean, it's very important to point out, as we do in the story, that while there is some evidence or some belief that some of NVIDIA's banned products are making their way across the border, there's no evidence that enough to even constitute a sort of medium-sized data center are making it across the border. So obviously this is something we're monitoring, something that the government is monitoring, and something that, certainly NVIDIA and its customers will be held accountable for. But, there's a gap between the desire and what's actually possible right now, as far as at least the reporting in that story would indicate.
I also do wonder, it just is a reminder, too, of China's own, AI ambitions and what it's looking to do. And if it's not with NVIDIA chips, it'll make its own, or it'll figure another way.
Yeah, there's been a lot of conversations, including by NVIDIA, and they're saying, look, Huawei, before all of the actions taken by the US government against it, was a very competent company. Of course, we've slowed it down. Of course, we've made it more difficult, but it's still a very competent company. Forced into the situation that it's in, it's going to find its own way. Might take it a while, but guess what? It'll get there. Do not underestimate it, is one of the big arguments that's being made there. And perhaps if we're not going to allow other countries, maybe they go to China.
Yeah, this is sort of the age-old question about, necessity is the mother of invention, right? If they can't get their hands on certain technology, then they can do it themselves. But a question that I ask you over and over again, Ian, when you're on with us, and it's been, I've been asking you this question for years, is about NVIDIA's moat and to what extent that the company can do something that other companies are far behind in their ability to do. Where does that moat stand right now?
It's we're not seeing any filling in of that moat. We're not seeing anybody creating a bridgehead, to use some horrible metaphors there. Companies like AMD are saying, we have competitive chips, and they're showing some growth there, and you say, oh, great. But then you just look at the sheer amount of spending and planned spending and projected growth. No sign of any slowdown in demand for NVIDIA's products, no sign of anybody catching it anytime soon. I think, the longer terms, the China's situation, what's going on in terms of others trying to make their own chips, the big customers, these are all clouds that have been on the horizon for a long time, but NVIDIA keeps forging ahead, so that moat still exists.
So, and go back to a quick take you did, or were part of, at the end of June, why world powers are sparring over computer chips, and we understand why, right? They go into everything. So is it, I don't know, it just seems like that's just going to continue to multiply, right? And so is it a case that there's just, more chip production, more chip giants kind of everywhere, or is it that we just continue to have just a few that dominate?
Yeah, the first thing is that everybody agrees on one thing, which is underlying demand is great. Whether it's for these massive data centers, or whether it's for electric vehicles, whether it's smart devices, full stop. Demand is unprecedented, and AI is helping